and it actually came in at 223,000. So I don't think that had any dent on the markets. There were other news, but nothing that was red news that would cause any issues whatsoever in the markets. A look at the US dollar versus the euro here. We have a weak US dollar currently. Euro is strong. And wow, the euro took quite a dive there last night. So Omar is with us. Omar, that's not good. After I spoke with you yesterday, I went and took a good look at euro US dollar from the top down and realized that that was a fourth wave that we were in. So the expected move was to the downside, and I'll show you in a bit. So strong euro US dollar, weak euro US dollar right now. So we had quite a strong US dollar overnight, and now it's turned to the downside. So currently then we would have Aussie US dollar going to the downside, and we'd have euro US dollar going to the upside, and not much yet. And I'm on the 4 hour. Let me go to the hourly. Let's do that again. Aussie US dollar to the upside very slightly. Euro US dollar to the upside very slightly. GBP US dollar, I think I passed it. GBP US dollar would be going up a little bit as well. And New Zealand US dollar would be going up a little bit. So after big drops, and USD CAD should be going down, USD Swiss should be going down, and USD JPY should be going down. And USD JPY is a bit choppy, fourth wave there. Oil, really strong, big, huge push on oil. Silver should be strong as well, a little bit, and gold should be strong, a little bit. Interesting. Okay. Not dramatic movements here on gold and silver, but all right. So it is 1 o'clock, and we think we're getting a new. Let me just double check here. NASDAQ. New candle on the NAS. Yeah, new 4 hour candle. So I want to take a look at this. So the previous candle on the NAS, the previous 4 hour candle, we had a open and a drop and then a way up, took out the high, but we could not close above the high. So the next candle now, current candle, we would expect would continue going down because the pressure is to the downside right now. And if I go to this is on the hourly time frame. So we can see we're in quite a chop here on the hourly, very steep chops. So I'm looking for price to be doing this and coming back down to take out all these lows down here. If I go to the 4 hour time frame, I'm going to leave that on. I'm going to go to the 4 hour time frame, and it's a totally different story on the 4 hour. So I've got this 1, 2, 3 up here, and I was calling this out from a while ago, and I'm looking for a few days ago. I think it was like maybe on Monday. We're looking for price to just come down from this area because we were kind of in this type of. Draw that line again, something like this. So looking for price to kind of just continue down, but instead they went up again, came back down again, went back up again. So we can see the pattern. So we know what they're doing, and our expectation would be that they're going to come down to take out the lows down here on the NAS. So we have some pressure on the NASDAQ, on the indices. But what is the catalyst to cause this to fall is going to be the big question here. I mean, it's going to be a pretty big downward drop here, downward move, but I don't know what the catalyst is. Interesting. So it's going to be quite interesting here. So that's my take on that. So we can come in here and catch some moves to the downside. So if I were to drop right down to the 5-minute time frame, what we're looking for is a wick to appear here. So we want to see a wick. So we want to see a candle like this with a wick and then all body going down. So for the next 4-hour candle is what we're looking at. So this should turn into a wick. So we want to get in. If you want to get in on this trade, you want to get in here somewhere and continue to move down. We've got a 1, 2, 3 top right there, another one, and we're kind of just chopping right now. So looking for a move to the downside here. So on the 1-minute time frame, we're looking to get in on a 1, 2, 3 in here somewhere. So it should be interesting to see if we can catch something. All right, and take a look at Bitcoin. And Bitcoin similar. I'm going to go to the daily. Bitcoin is similar, and we've been in this move to the downside. We were in this channel. At this point here, we've got a big 1, 2, 3. This drop, so we're inside a 4th wave here on Bitcoin. If I drop to the 4-hour, you'll see it much more clearer. So there it is. So there it is on the 4-hour. So that the big, huge 1, 2, 3 I just drew right there. We drop down, and then they chop it up and down. And so we know where they're going now. So we're inside this, just like the indices, we're looking for a big drop to come down, take out the lows. So we're looking at Bitcoin coming down to around 75,000. We're sitting at 83,000 right now. So this could happen in the next couple of days. This could happen possibly, or maybe by midweek next week. At the latest, perhaps. This is a 4-hour chart, so it is possible. You know, these 4-hour bars, they don't take very long, really. So that's what I'm kind of seeing overall. There's another 1, 2, 3 there as well, and we get this drop. Inside, we got another 1, 2, 3, 4, 5. All right, so on that note, I'm going to take a look at the U.S. dollar, and then I'll take a look at so U.S. dollar on the daily, also in the big, huge downward mode. So we went through this channel, and then they broke through the lower portion of the channel, and now they're chopping up and down here. So it looks like U.S. dollar is still very weak, and we would maybe get a push back up, but eventually coming back down again, it looks like.
That's
the daily time frame. 4-hour time frame, it too is also inside a 4th wave area. Let's see, so 1, 2, 3 from up this level, something like that, and then this big drop, and now we're just chopping up and down, and we could go a little higher up here, and then maybe a collapse for the U.S. dollar. Interesting. Okay. With that, then I look at Euro US dollar. If I go to the daily time frame. So what I failed to do with Omar yesterday when we were looking at Euro US dollar was to go higher to the daily first. I would have seen this quite a lot clearer. We were just stuck down on the 1-hour time frame. So we've had this 1, 2, 3, and then this chop. And then we get this big move to the upside. So it tells us right away that we're in a 4th wave. So that's the first thing. Immediately we should, if you see this, and if you're there, Omar, follow me here, you should see
yes, I'm here.
That immediately we're in a 4th wave. So once you know that you're at a 4th wave area, it's a totally different ball game up here than this move in the 3rd wave. So now I can drop down to the 4-hour. And so once I know I'm in a 4th wave, then you have to look at it in a totally different way. So we're inside a 4th wave. We're So if this is our 3 at this point, then we're just chopping. So we can expect something like, like that before they continue again. To continue to move to the upside. So, Peter looks at it and he calls that something to the equilibrium.
Price equilibrium or consolidation.
Yeah, price equilibrium and consolidation is what he calls it, right? And that's basically what's happening. They're chopping this all up now to accumulate and manipulate to continue to push to the upside. So now if I drop down, now that I know what's going on, if I drop down to the hourly, and this is what we looked at yesterday. So so if I go back to the 4 hour, so what we're looking at on the hourly is just this leg here. You see, so we didn't realize that over here that we had done this, because when you're on the hourly, you don't see that. So on the hourly, all we're looking at is that one leg of that whole move. So if we squish up the chart, like you always like to do there, Omar. So this is the number 3 point. So now we've come down, they've come back up. So because we know that we're in a 4th wave, we can expect that we should be coming back down here. So if we're here, we're essentially just around halfway of this move, the halfway point. Let's say we draw a halfway point in this area, then we know that we're only halfway in the middle of this move. You can see all the congestion in here, congestion in here. And so this is all too is just congestion, and it's just a 4th wave area. This is just like a midpoint area. So we have a big, huge 1, 2, 3 here. So if I have a huge 1, 2, 3 like that, if I have another a smaller 1, 2, 3 there, then this is just inside of it. So this move is only a 4th wave. This is only a 3, and this is only a 4th. So we would expect that we would go back down, take out this low, because we still have room to come down to the bottom of this channel that we're in. So if that makes sense, I'm sorry, I wish I had done that yesterday with you and gone over.
Well, that's fine. I did exit afterwards.
Yeah, because the expectation was that we come back up to the top, but that wasn't going to happen because of the fact that this huge 1, 2, 3 was controlling the move.
Yeah. So
because that's controlling the move, we're only at the halfway point, so we should expect to take out this low, and that's what's happening. So now you can play it back to the upside because we now know what they're doing. We now know that we have an A leg and a B leg and a C leg in place. So you just need a 1, 2, 3 here now on the hourly, and you can play this back to the upside. You see, back up to the top.
Yeah, I'm looking at
our channel.
I'm looking for a long setup now.
Yes, so you can do that back to the upside now a little bit more confidently, and then we'll get our D up here, and then we'll be looking for another long leg to come back down to take out all these guys. You see? Because the E leg is going to be, if I make a capital E and keep it the E leg that's going to come down over here is going to be 5 waves down. That's going to take out all these guys. Well, especially C anyways. C's already taken out A. See, they swept that. So we'd be looking for 1, 2, 3, 4, and 5 to go back up to the top.
From what you're demonstrating, how would you rate the 4-hour chart on any instrument?
How would I rate it?
Yeah, in terms of you analyzing market structure. So you would look on the 4-hour and you see the 4th wave is quite obvious on the 4-hour.
Yeah, well, sometimes it is. I mean, it all depends. So it's best to start higher, like on the daily or even the weekly or even the monthly sometimes, just to kind of get your bearing, of where are you on the chart really, Are you in a big, huge 4th wave on the weekly, or, and so on, right? So if you can get your bearings as to where you are in the structure, that really pays dividends when you're looking on the lower time frames. So this is something that you know, you asked me to look at this, but we stayed right on the hourly. So when we stayed on the hourly and we looked at it, it's completely a different take because we have not taken a top-down look at the chart. So we're blinded. It's like we're in amongst we're on the forest floor, and we haven't gone up in the trees to take a look and to see, oh, there are wild creatures all surrounding us, and we don't see them because we're on the floor and we're hidden by all the foliage. You understand what I'm saying, right? We have blinders on when we're down on the lower time frame because we're not looking at the higher time frame to see what's going on. And if we had done that, we would have seen that, oh, we had this big push up from a 1, 2, 3 bottom, and now we're at a fourth wave level, and they've already made this move, and they're coming down, and we're just in the middle portion of that move. So that would have given us. So yeah, that was the problem there. So at this point, we're not done yet. This is the structure. And then we have inside the structure, we have these other moves that are going on. So inside the structure, you have these other moves. So now that we're at the bottom of this move, we can look for a nice clean 1, 2, 3 here now to take us back up. Even if you only wrote it up to this level, that's huge because we don't know what they're going to do here. They can come all the way back down again before they go, right? So, yeah. So this is where you want to get in and ride it up to this level and get out, and then look for a new 1, 2, 3 over here to continue going up. All right, so I hope that helps a little bit. You can see it's forming right now. So if I drop down to the 15-minute time frame, I can see that if we call this the bottom, and again, we can't say that's the bottom at this point yet. It looks like it is, but we've got a 1, 2. So we could do that kind of move, take out that high, pull back in, and then that will give us our 1, 2, 3, right? So something like that might work.
Okay.
So patience, especially on these time frames, 15-minute, hourly, 30-minute, you have to be a lot more patient and not jump in too early and get fooled.
I was looking at the NAS just now, and when I look at the 15-minute, I was wondering if there's a case for a 1, 2, if that's a 1, 2, 3 bottom there.
Okay, so again, if I go up to the 4-hour, we are inside a huge fourth wave. So if we're inside a huge fourth wave, yes, we can look at on the 15, we can find 1, 2, 3 bottoms and so forth. However, more often than not, inside these structures, they're only giving us ABCs. They're only giving us ABC constructs. So, and what that means is that we're not getting impulse moves. So impulse moves means that our number 4 point does not come into the number 1 point or the number 2 area. So if it's an ABC, then it's allowed to come in that area, you see? We can come into it. So it changes the dynamics of what's going on. So sometimes we're looking for that fifth wave because you got a 1, 2 and you don't get it. And the reason why is because they're coming into this area. And so they don't give you that fifth wave because it's only an ABC. So understanding that, if I go back to the 15 and you see a move like this, yes, it looks like it's a beautiful 1, 2, 3, and we would look for that move to come back up and take out the high, but that's not necessarily so, because if this is an ABC, then this C leg is done, and then we don't get a fifth wave because inside this C leg, it consists of 1, 2, 3, 4, 5 waves. You see? So it's done at that point. So it's done here. And then now we're starting over a new wave again. So like here, this would be considered a 1-2, and then we'd be dropping down and looking for another drop to come down and take out these lows, because our structure says, yeah, that's what we should do. But we're inside a fourth wave, so again, this can be just an A and a B and a C, and it's done here, and it's not going to do what we think it's going to do, coming all the way down, take that out. It'll do it. That's what we're looking for it to do that, but it can do it in a very unorthodox way, in a different way than what we're expecting it to do. So at this point here, this is looking good for us to come straight down and take out these lows, because this is more of an impulse move. So I'm liking this move to the downside here, but here I wouldn't be expecting another move back to the upside to take out these highs. So I don't know if that makes any sense, but that's.
Is it because they came back down so far, or you're saying because we're in a fourth wave?
Because we're in a fourth wave, it's ABCs that they're giving us, just ABCs. So ABCs is a totally different thing than an impulse wave. It's more of an ABC is more of they call them flats, or they call them triangles or diagonals. We're in a different type of structure.
Yeah.
See? So like this structure is like this. So it's a different type of a structure. So they're giving you these types of structures, and it's very difficult to explain and pinpoint and realize what they're doing until you go to the higher time frame, and like the 4 hour, for example, and see that, oh, I see what they're doing. Because when we were here at this point on Monday, I believe on the 10th, and was the 10th. Okay, that's 11th. When we were in this area and they started doing this, my expectation was that, they chopped it up enough. We were more than likely going to come down and take out the lows and continue down. You see? But they had other plans.
Yeah, you just have to keep adjusting and go with them.
Yeah, you have to keep adjusting, because, it looked like if you drew a line here, it looked like, okay, maybe, and I didn't draw it, if I draw it even tighter, right? It looks like, okay, they broke through and so forth. Maybe it's time for them to come down. But once they break through and start playing around now, it's a totally different type of construct that they're putting together here.
But a follow-up question as well. Where would the 1, 2, 3 start? Because where they are now, you could expect them for you to consider a sell. Most times you want to be in premium, yes.
Yes.
So you would want, if your 1, 2, 3 is higher up, where would you mark your 1, 2, 3 here on this 4 hour chart?
On a 4 hour time frame?
Yes.
Okay, so we'd have to look at where it started. So right up there, right?
Okay.
Is that what you mean? Or are you talking about just in this fourth wave area?
No, not in where it started at the top.
Yes, you have to look at where it started at the top, which is right up there. So that's where this is where the controlling move started. So your 1, 2, 3 would be that controlling 1, 2, 3 right there. Then we got a second one, and then we started getting this drop. So you see, this is the controller of this entire move. So yes, when they come here and do this and break out of it, a lot of traders are putting their stops down here. Why? When it breaks through here, why are they doing that? Because it broke this line, right?
Broke the trend line.
A lot of traders are thinking now that this thing is heading up.
The trend is reversing.
Yes, but they're tricking everybody. This is a huge third wave, and now they're just tricking everyone. So you don't even see this at first. They're tricking everybody by putting them into this sideways. Could call it consolidation. You have the accumulation, manipulation. This is accumulation, and manipulation going on in here. And
All
so
right.
they're chopping it all up, and they're not going up any higher. They're coming down now. So this whole move started by this 1, 2, 3 top. It comes all the way down, and they chop it up in the fourth wave. So you won't see this unless you come up to the higher time frame.
All right.
So people down in the lower time frame who draw their trend lines, and it breaks the trend line, they're all piling in to go along, right? And
Right.
and maybe they think they're still going to go high. I mean, a lot of them would be still stuck in here right now, right? If they got their stops here, because it hasn't come back to take them out yet.
Yeah, all right. So since you identify that 1, 2 at the top there,
Mm-hmm.
if you want to be selling, you want to be selling at in premium. So I'm thinking that there could the possibility exists that they could go higher because you wouldn't consider price to be in premium now.
No, not from this drop. We're no longer in premium. No.
Yeah. So I'm saying before they take out those lows, the possibility exists that they could go higher. They could push up
I don't
price
think
higher
anymore. I don't think anymore because of the fact that they've completed the structure already. You see, they've done the structure. So at this point, this wick right there swept this high. It's a sweep right there. So I think that's it. They're done, and when we're coming down now, so that gives us our A, B, C, D, E construct, and should take us down at this point.
So you're saying that the E leg is completed there?
Yes, they did it very quickly.
Okay.
It's possible, again, we're still in the fourth wave, so they can still mess you around. It's hard to say definitively, yes, we're done, but it looks that way because I've got my A, my B, my C, there's a D at this point that I was expecting to be taken out this week there, and we didn't go down and take it out because I'm expecting 5 waves down, and I don't get it. And then they move back up, and now they've swept C with the E leg. So E leg took out C. D did not take out B like normal. C took out A like we expect. So there's no more liquidity up here except for E. That's the only place that has liquidity. D has liquidity, and B has liquidity, and number 3 point has liquidity. So the liquidity is sitting all down here now, right? Except for E. So this is where they're heading. So if I come down on the hourly, you can see what they've done. So we got an impulse leg here to that level. Then we came down A, B, C only. See, I'm expecting them to drop it here. That's what I was expecting this week, that they would come down. They didn't do that. Why didn't they do that? They're just doing an A and a B and a C leg. But when you're there looking at it, to us it's a 1, 2, 3 top. So we're expecting this to be a fourth wave, and then we drop down, and it doesn't happen. So then that becomes a leg up. They sweep the high. So they've taken everybody out. They make a 1, 2, 3. They then take these guys out, just vicious. And now it's going to be a new 1, 2 here to come down. And yes, it is possible, and I could be wrong, of course. It is possible for them to go back up one more time, take out all these guys, but it doesn't seem like a likely scenario. It's a probable scenario, but not, because they've already swept both. There's only these guys here sitting there with liquidity and these guys. So would they really go back up here to take them out? Probably not, I wouldn't think. So more than likely, we're gonna get a 1, 2, 3 here to continue down, or just continue straight down from here. So that's why I'm looking to get in now at this point to continue down. So let's go down a bit further, 30-minute, make this a little wider. And we start to see what they're doing. So there's a 1, 2, 3 right here. So that is controlling the current move. So if that's a 1, 2, 3, then we know where we are already. And so we will be expecting to leave out of this and drop down. Now our 4-hour candles help. The 4-hour candle says, oh, we opened, we dropped, we went up, took out the highs, come back in. We're stuck way back down here. We open on the new candle. We've got our wick. Here's our wick. So with the expectations that they're heading down to take out the lows of this 4-hour candle, which is right here, short term, and that one, and the previous 4-hour candle. That would be our short-term targets. But look at all the other targets below. See?
Could you look at the daily? And my point, I'm trying to understand is the premium and discount, because we're in a fourth wave now. I'm wondering if the possibility exists that they could that we are not in discount, we're not in premium as yet. So all right. So look at the rundown, and you can see it's looking like a fourth wave there on the daily. It's how would you identify the 1, 2, 3 here on the daily?
So the 1, 2, 3.
From
okay. A good way to gauge where the 1, 2, 3 is. Sometimes it's not easy to see it. So a good way to gauge it is to look at the previous move. So the previous move to the upside was here. So if this previous move consists of 5 waves, which it does, very choppy, but it does, then we could expect that the new wave would be about the same length or height, approximately. So we could say that this whole move down to here is 1, 2, or we could say it's 1, 2 to here, something like that, right? And then we're getting this drop. You see?
Okay.
You're looking at the previous leg to judge where the current leg would likely go to. So it could come down to this level, or it could have been into here. So it's difficult to say which one it is at this point, because it's, you could say it's that one. It's a very short, shallow retrace. That could have been a fourth wave in a move, in the whole move, and then this was the actual move to this low here, and then we got that move back up. That would have given us our number 2 point. Then we get a new 1, 2, 3 here, and then this drop into this fourth wave that we're in. So there's a couple of ways to look at it. So we can't really see it clearly, so you have to go to the 4-hour to see it. That's why the 4-hour, I have to squish it up, but the 4-hour, it might be a little better. So on the 4-hour, I can see my first 1, 2, 3 is here. So then I'm looking for 5 waves in there. So that looks like, yeah, that would be my first leg. You see? So that whole thing becomes the 1, 2, 3 top. So this starts it, yes, but that's just the beginning of the first leg of that move. It gives me that entire leg. And then we get this run down. And inside of this run, we have other structures making another move down, other structures inside. So if that makes sense, I think that's what they've done here.
Okay.
So now we can see what's going on. They've chopped it up, and we're looking for them to come down and take all these legs.
Okay. Because the fourth wave is so tricky, I'm trying to analyze this in a
Yeah, I understand, and I think here I would have expected a fifth wave going up. In this move, I would have expected another leg up, but they didn't do that. They just wicked these guys out took them out, and now they're turning it back down. So I wouldn't expect them now to go back up again. It's possible, yes, like I say, but the probability, it's probability game, right? So the probability now becomes a lot less that they're going to go back up there.
Okay.
I would think at this point.
Okay.
And based on the 4-hour candle, I'm looking more for sells in here now than anything else. So I'd want to be coming down on this time frame here. And so, yeah, so this is what I was looking for. Remember, I'm in the wick of the current 4-hour candle. This is where you want to get in on the wick of that 4-hour candle. So we opened there, they went up here. So there's your entry. There's your entry to catch this move. So that's how you catch it. You want to catch it in the wick.
From the 4-hour?
Yes, I'm on the 1 minute time frame, but I'm in the wick. These are 4-hour candles over here. These three are 4-hour candles. So I want to catch the entry in the wick of the 4-hour candle.
But
understand?
In real time, how do you know that that 4-hour candle is a wick?
In real time? Because
Yeah,
I have the
because
4-hour candle painting right here.
Yeah, but price would have been up there at that point, so it would not be a wick at that point.
It is, because you know where it opens. It's opening. The opening of the candle was right here. So when it moves up, it's moving into the wick. See, the wick is here. See? It's a 4-hour candle, so the candle on a 4-hour opens somewhere. It has to open somewhere, right? So it opens, and then it moves up in this case, and now it's moving down. You see? So it opens. This is the high. So it opened right there on this line right here. See that dotted line? It opened. That's where it opened right here. And then it went up high. So this is the high of the 4-hour candle right here. So that's the open that went up high. So you want to get in as soon as you get a 1, 2, 3 top. 1, 2, 3 top. So you got 2 chances at it right there to get in to catch that move. Now you're in the body of the candle, essentially now, coming to the downside. So the candle would look like this. This is the wick. And now we're in the body going down. See, they dropped it down, and they made a tail, and now they're pushing back up. And we know what we're expecting here. We're expecting a little bit of gyration and a continuation to the downside. Because we have a 1, 2, 3 top that's controlling the move to the downside. So we're expecting them to continue down. That makes sense?
Yes, it does.
Yes. So
Yeah,
that's why I have this little indicator here. It gives me my 4-hour candles, and I can see from the 4-hour candles what's going on, and I can make my decision based on them. I've been trying to explain this to you guys for a long time here about the 4-hour candles, how powerful they are. If you can see what's going on the 4-hour candle, you can make decisions as to which way you're going to go and so forth. So the key here was the previous 4-hour candle. It opened the way down here. I have to go higher just so you can see it. Let me go to the 15. Okay, that's better. So the previous 4-hour candle, the middle one, opened right here. So that opened there, and then it dropped. So there's the tail. So this is where you want to get into this. You want to get in. You want to find a 1, 2, 3 down here. Why? Because it opened here and dropped. So now you want it to go up and take out the high of this previous candle. And that's what they did. They opened, they went way up and took out the high of that candle, and then they came back in. Now, because they closed here, way back down. You see if you mark the high and the low of this candle, the outside candle, where's premium and discount? Premium and discount's about here, right? Midpoint. So
Yeah.
they close back down into premium. So that means there's so much pressure on the sellers are pushing this down so much that the opportunity for them to go back up is very, very low. Probability wise, we're not going to go back up. So the next candle that opens, the current candle, we would look for them to give us a wick to fake everybody to go long.
Yes.
Because the previous candle was green. So a lot of people are thinking, oh, they're going to go up again. But it's not so, because the pressure is to the downside.
And they swept the highs there.
And they swept the highs. So now the pressure is to the downside. So the wick is your opening to get in to continue down to take out the low of the middle candle and the low of the previous candle. And we can see it because we have 1, 2, 3 there. And it's a double 1, 2, 3 in there that we see 1, 2, 1, 2, and then we get this drop. And so we're expecting them to take out this low and this low. So if you can get in and get a ride, even in this area, you can make profits to this level or to this level.
What I've been looking at, because the smart money concept has a part of their indicator is they have the daily, the weekly, and the monthly highs and lows.
Mm-hmm.
So you can see the past highs and lows for the weekly, monthly, and the daily on the lower time frames. So when you see a sweep of the daily high,
yes,
yeah, you could consider
you're looking for a 1, 2, 3 at that point to come back down.
at the top. Yes,
yeah.
Yes. I mean, it depends. It depends on the market structure.
On the direction that you're heading. Yes, the bias.
Yes, because sometimes it could be a continuation and not a
not a sweep. Yes.
Yeah. Yes.
Yes. So yeah, that's an effective way as well. There's so many different ways to skin the cat, as they say, right?
Yeah.
But yeah, that certainly works.
Yes, you have to combine it with market structure too.
Yeah, the structure is number one. If you don't know where you are on the chart, a newbie looking at the chart, this is just a mess. They don't know what's going on. So to tell somebody to come in here and play, it's like suicide, right? Now, Nick Sean, the Nick Sean method, he says you can come on to any chart, and he uses the daily time frame. I believe he's playing on the daily. So he's like, come on the daily and just buy or sell. You can just buy or sell. You don't have to know what the chart is doing. Doesn't matter what the bias is. It doesn't matter. Just buy or sell. So suppose we bought. Let's say we were up here. So he's saying, okay, you just came on the chart on this daily candle at the top, and he says, okay, let's buy right here. So you make a buy. So this is the strategy that he uses, and it works, but it's a deadly strategy, because if it doesn't work, you're going to be busted. So you buy. So you have the choice. You can buy or sell, right? So say we decided, okay, we want to buy. So we buy right there, and look what happens. The market drops against us. So what he's saying is, okay, the market's dropping against you, but it doesn't matter. Just keep buying. So we buy more. Just keep buying, we buy more. Just keep buying, we buy more. Just keep buying. Just keep buying, because eventually it's going to turn around and go back up and get back to where you bought. And then you accumulated all these buys. So as you're moving up now, you can start selling them off, right? till you get back to break even up here, and you've accumulated all these profits. But in the meantime, you've accumulated all these losses coming down. So your profits are going to eliminate your losses going back up. However, if your account can't withstand that, you're busted. You go to zero, right?
Yeah, he would have to have, he must have an account that
You
is
have to have hundreds of thousands
large.
of dollars in your account to do this kind of thing.
Yeah.
And he's using, he's saying, okay, 0 point, you can do this with 0.01 lot and do this kind of thing, right? Sure, you can do that. But again, your account has to be very large for you to withstand some, like this is a huge drawdown,
Yeah.
right?
I can understand what he's saying, but not everyone can do that because
No. And, this is just a blind buy or sell. Now, if we'd chosen sell, we'd be laughing, right?
yeah, because but in a case like this now, you would be buying at a top.
You're buying at the top and you're buying, you're just buying all the time. Every time it's dropping, you're buying more because you're adding to you're trying to mitigate your loss. So first of all, you have to be able to, you can't be in the United States because you can't buy and sell. So you're not allowed to hedge. So you have to have an account where you can hedge as well. So that's another factor. Because if you buy here and you start to it's going against you, it's very difficult for you to do that. I think you can't hedge in the States, and this is called hedging, I believe, if I'm not mistaken.
Yes.
So yeah, it's a deadly way to play it, but it does work. You can come back and make a lot of money out of that loss that you had, if you can stay afloat. So there's a number of ways to play in the markets, but yeah, not for the faint of heart, that one, that's for sure.
Yeah, you have to be able to withstand the drawdown. But then what if it keeps going down, because you can have
you're going to lose your account. That's what happens.
Yeah.
So he says, so what? You lose your account, then you just start another account and do it again. So that's his method. Eventually, you're gonna win, and you'll make that money back and so forth. Is what he figures. Okay, so I see what's going on, what they're doing here now, right? I can see that what they did here was an A, B, C, D, E. So I'll be looking to enter the trade right now to go to the downside here on the NAS. So this is a nice setup. Just looking at it, I would sell right here. I've got a fractal, and I would sell to continue coming down.
Yeah, they came up very high there.
My stop would be above the high, and looking to take profits where, quick profits down to the low here, but could probably go lower than that, I'm sure. Let's just do 35. Can I get to 35? $3,500. So once you can see what they're doing, I got a 1-2, I got another 1-2, I get a drop. Now they put us into a fourth wave. So the expected move is to the downside to take out this low.
Yes, they would have enticed a lot of buyers there as well.
They're enticing the buyers. So lots of stops are here, right?
Yeah.
So the best time, once you can see this, if you can see this pattern and they're moving up like this, the best time to buy is when it's moving up. Or the best time to sell, I should say, is when you sell when price is moving up, because you get a better price, right? Now we're in premium, right? Because we're looking at this this area and we're in premium, halfway point premium, you want to be selling them in premium to come down back into discount. So if you want to make really quick profits, you can do this, quick dollars there. You don't even have to go. You don't have to even go all the way down to the bottom. You can take profits off there on the first one if you want, but you can take a portion off and continue down. Now so there are a number of ways here because we've got a gap, so they can come back up into the gap. Get that gap perfectly. One more tick down right there. So they can come back up into the gap before they come down. So if they do that, you can add to your position, or and so on. Or if you haven't gotten in, you can get in at that point. If they come back up, that is. There's no guarantee they're coming back up there.
Yeah, the best position there would have been to get in at that gap, that high.
That's why I like the fractal entry right there. Right?
There was a gap.
I was
there.
A little late, but I'm right in that middle area, so it's pretty good entry there. Yeah. So a lot of times they don't come back in here, and the reason why they don't come back in here is because the candle that made, when we have a gap, I'm going to mark the three candles. We have a 3-candle gap. So we have these 3 candles like this. So when we have a gap, the low of this candle, high of this candle, we have this gap like that. When we have this gap, if the candle that makes the gap right here, so the candle that makes the gap, if we close below this candle, and we did, right? If we close below it, the chances are that the next candle might not come back in. None of these candles will come back into the gap because the close is weak. We closed way down here, so they're not going to come back. So this is why sometimes price doesn't come back, because they closed below the candle. Do you understand what I'm saying?
Yes.
That closure below. So it's these little things that people don't even look at and don't even notice and don't even think about, and is what's the key to all these things, right? So a lot of traders would have set a limit order, for instance, midpoint of the gap. A lot of traders do that. They put a limit order in the mid. They're not going to get in because price will never come back up there.
Could you repeat why sometimes they don't go back?
Okay, so the reason why, so this is the candle that started the gap right here. This candle started the gap. So this is where the gap starts. This is the candle that ended the gap. As soon as this candle closes, this candle here closes, we get this gap, right? We get the gap. With me?
Yes.
So the closure of this candle, where it closes, is very important. If it closes below the middle candle, if it closes below the middle candle, then the chances of price, the next candles after that, when coming back up into the gap, are very slim. Let me take a portion off here. Do you understand? The chances of price coming back inside the gap now the probability becomes less because we closed below the middle candle. If we didn't close below the middle candle, then more than likely price could come back in.
Okay.
Does that make sense?
Yes, it does.
And the reasoning is because there's selling pressure. So we close below. So that means the next candle is more than likely going to keep going lower. The next candle is more than likely going to keep going lower, and so on. And then we're going to come down to reach our targets quicker. And why are they doing that? Why are they going quicker? Because there's liquidity here. There's liquidity here. So they're going to go down quickly to take them out. They don't want anybody to get in. See, they don't want you to get in up here. So this is our classic 1, 2, 3, 4, 5 move. So if you can pinpoint this, yes, you can catch this move. This is almost identical to your Euro USD yesterday.
Yes.
They did this, but on the Euro USD, they chopped it up and up and up and up like this all night long, and then, right?
Could you put the fib on from the number 2 point to see how far up they retrace?
From this point or from this point?
Or probably from the top one would be, yeah. Seems
So,
like about 78.6.
to this low. Yeah, we went 79%. Oh, well, between 62 and 79%.
Yeah.
Yeah. So it's a very deep retrace.
That's kind of what you want.
Usually on a fourth wave, we want to see them. I mean, I'll put this fib back on and we'll leave it on this time. So what we typically want, remember, we want to have a typical retrace of about 50 to 60 to 50, 60 to, sorry, 38 to 50% is the ideal. We wanted them to come back in this area and then come down rather than coming way up here. If it's the second wave, like here, this retrace here, we want it to be 50 to 62%. Right? That's the typical retrace. But for this level, from here to there, we want that to be between 38 and 50%. And the reason for that is because if you look at it logically, this move all the way down is very long. The move back up, the higher they go, the harder it is for them to make it to this low. It's more of a challenge to make it to the low. Yes, they'll make it, maybe and they just tick it. But if it's shallower, you see, if it's shallow, it's going to be getting there quicker. You see, the shallower it is, we're going to get there quicker, right? But the deeper they go, it's a longer traverse. Makes sense, right?
Yeah, and sometimes they will have you confused.
Yes, and they make it look like they're going. And a lot of times, remember, we think, oh, maybe I'm wrong here, and we are going long, and you start jumping in to go long, and no, they're not going long. They're just tricking you. So now they've taken these guys out. So now we know where we are again, right? We've got a 1, 2 there. So it's the same thing that we just did here. We just did this. So now they're doing that same thing. So they're going to do this same thing here in here before they drop. They can do that, or they'll just do a little hiccup and then drop it. So once you understand where you are and you can pinpoint your 1, 2, 3, then it's all over. You can quickly make profits. If you can pinpoint that 1, 2, 3 and get in to your nice comfortable seat in the train, you catch that ride to the next station, your destination, your target. Omar, this is so beautiful because if once you really understand it and you can, really feel confident about doing this, it's beautiful because you can go in at any time on any time frame and do this. Any time of the day, doesn't matter if it's Asia session or whatever, people are afraid of Asia session. That's hard to say because it's just chop, but it's not just chop, right? It's not just chop. There are structures within the Asia session, and so if you can understand what's going on, you can catch a 1, 2, 3 in there and make profits quick and get out.
Yeah, I think so. Part of the challenge is the patience to watch the chart and wait until the right time.
Yes, big time.
Yeah. So, sometimes you might force your entry, but
so I typically do not move my stop. I typically leave my stop where it is, and however, you feel anyway, you can always move your stop in. If you move your stop in to positive, like if I move my stop here, I could be in jeopardy. And the reason why I could be in jeopardy is because there are equal highs here. So if I move my stop in too tight, they can wick it, take you out, and then continue down without you. So you have to be careful about moving your stop in too tight. You can move it to break even, and even break even is, you can still get taken out at break even. I don't like break even as moving my stop because that means I get zero. I want to get something out of it, even if I'm going to be wrong or whatever, get a little something anyways, right? A little positive. So I put it into positive if I'm going to move my stop. At this point, I could add to my position. I could say, okay, let me add some more because I see what they're doing again, right? They're just making this move, coming back up to drop it. And why? Because they came back into a gap right there. So they didn't go through the gap. So we should continue. The gap is acting as resistance, so we should continue down. If I'm wrong and they go through and take me out, then I'm wrong, right? And it's okay to be wrong. But based on this structure, they should be coming down to take out the lows. So the only liquidity left now is here and here and above. So everything's pointing to a move back to the downside here. So if I can stay alive here, and again, we have 3 equal highs here practically, so they can just wick it just to be mean and take me out and then continue down without me. So that's the one risk you take by moving your stop. So you see, so now I'm feeling, okay, I shouldn't have done that because I put myself in jeopardy. So I can move my stop back above. But should I or shouldn't I, right? So I'll let it be just to see what happens here because I'm expecting them to continue down. But yeah, they're coming back in here because they know that if anyone got in, they probably put their stops above these highs here. So that would be a little pocket of liquidity in here. So they did come through this gap quite a bit. And it didn't look like they were going to do that, but they did. Okay, so I'm seeing something else here as well. There's an inverted gap over here. So boy, these guys are good, man. I'm telling you. So there's an inverted gap here. They've come into the inverted gap. So maybe that will hold them back here and we should continue down. So this gap doesn't make any difference at all. Didn't make any difference. Didn't care about that one. So let's see if they continue down here. All right, now Peter said he made some a nice trade on Tesla this morning. So Peter, if you're still with us.
Yeah, I'm still here.
All right, let's give you a chance to showcase your trade from this morning. If you're
Yeah, that's a good idea because I want to see if you agree with my logic.
okay. I've done enough talking as it is anyway, so.
Okay, well let me share my screen.
Okay.
If I can figure out how to do that.
And a quick note to all the YouTubers out there who are watching this, if you like what we're showing, this is just for educational purposes. We appreciate if you give us a like and subscribe to our channel. Thanks very much.
Can you see my screen?
Yes.
Okay, I'm on the 1 minute chart. That's the chart I trade Tesla. And so let's have a look at what I saw and what I did. I'm not saying that I'm right, but I made some money, so I guess I'm right. But I want Lennox's assessment of my logic because I'm still learning how to read these charts, but I'm getting better at it thanks to Lennox. Anyway, on the 1 minute chart, you can see at the open this morning, I was talking to Armin and price had dropped down. I don't know if you can see my arrow. Can you see my arrow moving?
Yes.
Okay. Price dropped down and then it formed 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 3, 4 back-to-back 1, 2, 3s. Okay. And then price advanced up to 3, down to 4, up to 5, and then it formed a 1, 2, 3 top up here. Okay. So then what it did, it took its while. I watched this for a long time. It took a while for that 1, 2, 3 top to come to fruition. And then what happened was I was watching my screen in and around this time right here. And I think I drew a trend line at some point in here somewhere. But anyway, I saw that price broke the trend line, and I caught this trade going down. I see this as wave 3.
Mm-hmm.
So wave 3 came down, and I got out down here somewhere, and then we went into wave. I assume we're in wave 4 now. Like, if you look at the 5 minute chart, you can see we're in wave 4, unless Lennox disagrees. But it's kind of a long wave 4. So, like I said before, I caught this wave down, the wave 3 down, and then got out down here, took my profit, and I'm sitting on my hands now because I see that I think we're in wave 4. So what I'm looking for now is a 1, 2, 3 top to get me out of wave 4, and I'm patiently waiting. So far, I don't see a 1, 2, 3 top. But if I'm patient, I assume that it will happen sooner or later. We're in this convoluted channel here, which I believe is wave 4. I thought it was interesting that I'm starting to catch on to what Lennox is saying, because when wave 3 came down, this is the wave 3 that I caught on the 1 minute chart. You can see all the gaps, like one gap after another. So the market makers came back to take care of these gaps and more, and they've risen quite far, but I think they've gone up as far as they're going. I didn't do any trading in here, although I saw what presumably are 1, 2, 3 bottoms in here, but I just have a morbid fear of wave 4, so I'm patiently waiting for the market to go down. So I don't know if you agree with my assessment so far, Lennox.
It looks pretty good. Yeah.
But we're in wave 4, and I'm looking for a nice 1, 2, 3 top. I sometimes have trouble identifying a 1, 2, 3 because sometimes your mind plays games. You want to see a 1, 2, 3, but is it a 1, 2, 3? And so I'm just, it's just like going back here on the 1 minute chart. I sat and watched this area here after the 1, 2, 3, top 1, 2, 3. Then it slid sideways. I was waiting for the wave 3 drop, and it took quite a while. I had to be patient in here to just wait. And then finally I caught it right here. So that was good. And so now I'm out of the market and I'm waiting for another opportunity to grab some more money. But the thing I find is that you have to be really patient. And one of the things that I'm going to take these off now because we know what the channel is. And one of the things I find that really helps me concentrate on what price is doing is I draw trend lines. This is demand or support trend line. And I'll draw also a resistance. Just have to move this. The resistance or supply, a resistance trend line here. Connecting swing high back to the last most recent swing high, projecting it out into the future. And this is the most recent demand or support trend line. So you can see we're forming a triangle in here, and it's a negative triangle, in a downtrend as far as I can tell, because we're still in wave 4. And so these trend lines will help me get ready for when price is eventually going to fall. And it usually falls when you least expect it. So I find with myself, I have to stay glued to my screen from 6:30 in the morning to 1 o'clock, just waiting for things to happen. Because like I said before, this drop over here, wave 3, it happened very quickly. And it just gapped down. All you can see all these gaps here, which the market makers eventually went back to fill and
So
take
you need
out.
to be in your seat ahead of that drop, otherwise you miss it.
Well, I caught it because I draw these trend lines.
Yes.
I had a trend line in here, and then I could see price break through the trend line. So the reason I'm drawing trend lines over here is because you can see we have a triangle now formed by the most recent demand or support trend line and the most recent resistance trend line here. And so you can see that forms a triangle. And so what price is going to do invariably is it's going to go through the apex of the triangle and either go up or down. I'm assuming it's going to go down because I don't see any reason for it to go up. This wave 4 has been quite convoluted and long. And I haven't done any trading in here because I'm just waiting for what I perceive to be the market wanting to go down at some point, continue the trek down. And so I personally don't see any 1, 2, 3 tops in here yet, although your mind can play games and try and see one. But I like to see a really good 1, 2, 3, like over here this morning on the 1 minute, we had back-to-back 1, 2, 3s, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4 back-to-back 1, 2, 3s, and then up she went. Up to 3, down to 4, up to 5, a very short wave 5, and then a 1, 2, 3 top, and then it slid sideways, and then boom. Okay, it really pays to stick to your screen and wait, because when things like this happen, they happen quickly, and you have to be on your game. So like I say, I'm watching this triangle in the 1 minute chart, trying to catch a 1, 2, 3 to take me out of wave 4 going down. So that's all I've got to say, Lennox.
Excellent. And to answer your question there, you said you don't see a 1, 2, 3, but currently in that leg. But where you drew your trend line to the downside, right at the top, there's a 1, 2, 3, right? You can see
Up
that.
here?
Yeah.
Yeah. That's a good point.
Well, you know
I
there has
see
to be a 1, 2, 3 there because that's the top.
Yeah, so I see that 1, 2, 3. I'd be happier if I saw a more pronounced 1, 2, 3. But I guess all we can do is to keep drawing trend lines. Like, you know, what I'm looking for is a really nice break south, and I'm not seeing it yet, although I see your 1, 2, 3 up here.
Yeah.
Yeah. So,
So,
I appreciate
again,
you now.
it puts us back into a fourth wave area currently that we're in on that leg going down.
Yeah, I see that 1, 2, 3 down to 3, 4 going down. Yeah. So,
Yes.
so I'm still looking for it. So we might have a 1, 2, 3 here. I'm still looking for a break of this demand trend line right here, and we might be getting it right now. So is my analysis okay?
I think so. Looks pretty good.
Okay,
I think everybody would concur.
Thank you.
All right. Thanks, Peter.
Yeah, you're welcome.
Appreciate that.
You're welcome.
All right. So let's go back here. Let me. I just closed the session, fortunately. So I have to start over again. You guys hear me? Hello?
Yeah, I can hear you.
Yeah, sorry, I accidentally closed the session.
Yeah, I can hear you.
Okay. I'm
Well,
gonna have to.
just
I'm gonna
restart
start
the
the
session.
recording again. Yeah, I hit the close button instead of the share screen button. So let me try this again. All right. Thanks, Peter.
Yeah, you're welcome. Thank you.
Okay, so here I'm back.
Start the recording.
So you can see what happened there with me in the NAS. They totally didn't do what I was expecting, and this is what can happen, and you have to be able to adjust. I'm expecting, and you know, with our structure, I'm expecting that since we came through this fourth wave chop, that I would get a 1, 2, 3, 4. Even if they came back up into here, I would get this drop to come back and take out these lows. And look what they do. They go all the way back up into the gap, even go above the gap. So what are they doing? You know, it's just so ridiculous. You know, you're not expecting something like that. So you just have to be able to adjust. And so, yeah, they stopped me out. I had moved my stop in. Remember, I said that these 3 equal highs could be in jeopardy. So they stopped me out. That's fine. So I jumped back in, and looking to continue down. I look at the S&P, and the S&P kind of gave it away a little bit too, because the S&P, they did the same thing, but the difference is they didn't go through the gap on the S&P. So the S&P is a little weaker at that point. Where the NASDAQ, this gap, the same gap, they went through a little bit. So they're very sneaky, very, very sneaky, and you have to be able to adjust to what they're doing. Because it's not always going to be just perfect the way you think it's going to be, you know, how I draw it out and all that. Everything looks nice, you know, when you draw it out. But the market's not like that. It's not, this is real. This is moving in real time. So you know, at this point, again, I'll just take a partial that will mitigate some of my losses from before, and then I'll just let the rest run again. So make up some I'm looking for them to come all the way down and take out the lows again, so I can move my TP back down to the low. So they're taking a roundabout way of doing what I'm expecting them to do, but these equal highs right here, they decided they wanted to come and take them out. So they took me out right on that wick, and then even went higher. So that's fine. So I jump back in. As soon as I get a fractal, I jump back in, and I'm on my way down again. So this time, I'll just leave my stop where it is. So Armin's with us, right? Armin, are you there?
Yeah, I'm here. I'm here.
Were you able to pick up the files in the chat? In your chat?
I did see them. Yeah. Mm-hmm.
Okay, good. Okay, so I didn't have, because I totally forgot to email them.
That's fine.
So sorry.
You can still email me. That'd be great. I was gonna say that Tesla, if you look at the monthly and weekly charts, that thing is wild. It'd be interesting to see your analysis for 1, 2, 3, 4, and 5 wave theory on Tesla in the big picture, because right now it looks like it's finding support at 225, 222, but if it breaks, it could go all the way down to 145. I don't know if your sound is on. We can't hear a thing you're saying. If you're saying anything, I don't hear you here. Is it my end?
Okay, I'm sorry. Sorry, guys. My sound wasn't on all this time.
Not while you were drawing all there.
Okay, so just saying that Peter was. So were you guys hearing me when I was talking about the NAS? And you were hearing me because I asked you about the files.
Yeah, we just.
Yeah, that's very odd. I didn't touch that button, so I'm surprised. Anyways, okay. So what I was just saying to about Tesla is that the 1, 2, 3 that Peter was pointing out at the top. This was the 1, 2, 3. So drawing trend lines, you can catch these entries, but the retrace is the better entry rather than the close below the trend line. So
yeah, I agree.
So if I draw a trend line at this point here, this is the last positive, or these are the last two trend lines down in the supply and the demand. So if I'm looking to go short, I can enter either on a break of the trend line or on a closure below the trend line. So I got two options there. Or if I see a 1, 2, 3 and I get a retrace, that's a better entry, especially if you have a gap there and so forth. That that's bonus. That's a way better entry if you can pinpoint your 1, 2, 3 and then you catch this move. So at this point, it's the same thing in the fourth wave. If now you know that you've got a 1, 2 here. So let me just do this again. You know you've got a 1, 2 at this point, and then this drop takes us down into a fourth wave. So if you know that you're at a fourth wave, they're going to chop it up in here, and now you're looking for a 1, 2, 3 to get out. There it is. So if you drew your trend lines again, and I put one here like that, that's your trend line that way, and then you'd have a trend line coming down. Where would it be? Something like it's a tough one on this. There isn't one really on that, so it's more up here. Anyways, so this trend line here, again, if you can see the 1, 2, 3, the retrace, that's a better entry than waiting for the breach of the trend line here or the closure below the trend line here. So you're getting in a little late by waiting for the closure, but it's a safer entry because they break this trend line doesn't mean that they're going to continue down. They could move back up too, right? So it's better to wait for the candle to close. I'm not one for waiting for the candle to close most of the time, so I'm guilty of I'd be jumping in early on that. But that's what, you're a risk taker. I'm a risk taker, so I don't mind taking the risk.
So
But
if you,
go ahead.
well, I was going to say, if we could look at the monthly and weekly charts just to see the big picture.
Okay, let me get rid of these lines because they're going to mess up the chart if I go up higher. We want to look at the monthly on Tesla.
Yeah.
Okay, give me 1 second here. I think I know what I did on that. Here we go. Okay, so monthly chart on Tesla is here. All right, so that's quite the downer looking chart there. Okay, I'm sorry, just real quick. Let me just take a quick look at NAS. I just wanted to see if my trade, see my trade played out now, right? So I put my target down just below the low and they came and hit my target. So I was expecting right here that we would do this and drop and take out the two lows and give me my profit. But they had a trick. They said, no, we're not doing that right now. We want to go back up for whatever reason, which you're not expecting them to do this. So you have to adapt and say, okay, all right, they didn't take out this high. So as soon as they make a fractal here, I'm jumping in. I could have waited for the 1, 2, 3 as well and jump in. You can put your trend line on that way and jump in here at this point and so on. And you catch this move and you see what they did. They did 1, 2, 3, 4, and 5 waves. And then that's it. So if you have to be able to adapt, it's not always going to be perfect. I'm expecting perfection though. I'm expecting a perfect move. I'm expecting this perfect move, but it doesn't happen all the time. So it's disconcerting when they do stuff like this, but that's what they do. All right, so let me go back to Tesla on the monthly. All right, so what are you asking now, Armin? You're saying that you think that they could be going lower? Armin with me?
Yeah, I just have my mic off. In the big picture, 1, 2, 3, 4, 5. Where is it?
1, 2, 3, 4, 5. Where is it? Oh,
yeah.
Okay, good question, eh? All right, so I see a 1, 2, 3 here. I see a 1, 2, 3 here. I see a 1, 2, 3 here. I see a 1, 2, 3 there. I see a 1, 2, 3 there.
Okay.
And this essentially is a 1, 2, 3 here as well. So 3, 4, 5. So that gives us our 3. Then we drop into 4. We come back up into 5. Then we drop back down. So we're retracing this entire move at this point back down.
Right.
So equilibrium type of thing, halfway point. Maybe I'm drawing that a little. So halfway point. So now they go back up. Why? They go back up to take out these guys up here. All these guys then who sold. And these are the big fish, right? The big boys playing the funds and big banks and so forth. This is on the monthly time frame, right?
Yeah.
So 1, 2, 3 here. They go up. They come back in. They come back in way too deep in here. I don't like that, but that's what they do, right? What are you going to do? You can't. You would be expecting them to bounce off here to continue up. That's what I would have expected. because I've got a 1-2 here, so I would expect that move. But they come back in and they sweep everybody out. It's just mean. But that's the way it is. It's not always going to be perfect the way you're expecting it. So then they come and make a 1-2-3 here, another 1-2-3 here, and then they go up, take out these guys. So at this point, I would have expected now that we wouldn't be coming way back down here again, like especially down in here, and we should be continuing up one more time to go back up and take out those highs. That would be my expectation. However, it's looking, you know, they're coming down quite a ways, so they're really enticing the shorts to come through. So I can see why you're saying we could be down to 125, 135 or something.
Yeah, there's a
because they're inducing the sellers to do this.
If you're looking at where it says 2024 there's a bit of a flat spot, right?
Mm-hmm.
Where it's trading around the 175 mark for 4 or 5 months. Are you there still?
Yes.
Okay. Okay. So yeah, so there's about, you know, you could there's a lot of opportunity to get in at 175 last year, and then it popped. It went way up. To,
yes.
You know, broke the record high, and
yes.
then kept going for a while. And it turned around $425 here on the monthly chart. You can see the candles, a double top, you might want to call it, like it's flat there. And now we got 2 huge red candles here. This is just really bad news for people that are long.
Yeah, nasty looking candles.
Yeah. So support looks like it's down around 232, where we've wicked down to. We wicked down to about 232.
Mm-hmm.
But if it breaks below that again, the next support is potentially again all the way down to 175. And if we break that, next support is around 145, 125.
Right.
So I'm just thinking, like, how bad can it get for Tesla here? We got April 2nd, another wave of
this is
bad news.
I mean, this is how bad it could get, right? It could take out that. It could take this out. Whoops! It could take this guy out. That's around 100, and it could go down to 0. That's how bad it could get. We know stocks can go to 0.
Okay.
Right?
Yeah.
Right. Yep. So we don't really want to see that.
Nope.
Right? Nobody wants to see that. I mean, as much as you know, people hate the guy and so forth, you don't want to see that. You know, this is a big company, and you know, we want to see them succeed because that's what it's all about. We want to see people achieve success, not fail. So, yeah.
Well, there's some consensus, like, you know, some big players like Barron's Dan Ives. He's talking about this looks like the bottom 225. It's, you know.
All right. Well, let's see if we can figure it out. Okay. So, this move here in this drop here took us down to this low of about 100. So I'm going to mark that. I'm going to mark that low. So this is a low that we don't really want to see them come down to. You know, this would be horrific.
Yep, that would be bad.
All right. Yeah, that would be pretty bad. So if we look at this move here, and this was our 1, 2, 3 at this point. If this was our 1, 2, 3, this is our 1, this is our 2. And so it's our 1, 2, 3 bottom, and this move up is our third wave.
Right.
And this move down is our first leg in our fourth wave. Now, the only thing I don't like about it is that we've come back into, and I keep stressing that, we've come back into this area. We didn't want to see it come back into this area. This is not good that it's come back into this area. So what it's telling us, if that's the case, if I'm correct on this 1, 2, 3, is that we're not in an impulsive wave. So an impulsive wave means price, the number 4 point here should not come into this here. We don't want it to come in here. It should just bounce off and continue. So if it did come in, which it has come in, then it's telling us that we're not in an impulsive wave. We're just in a diagonal type of a wave, like something like this, where it's chopping up and down like that, which is okay. It's just that it's like here, it's an impulse wave. Here, this is a clean impulsive wave because we didn't come back and take out the previous section. Yeah, you see how?
Correct. Yeah, I see that.
Understand?
Yeah,
Okay.
that makes sense.
In here, it wasn't impulsive. See, because we came back inside of this one. So that's not impulsive. We drop down here. So now we hit the bottom, and now we do this and come back up. In here, it doesn't give me a clean looking 1, 2, 3, 4, 5, but it's there. You can see it. And so I got an ABC here. So this looks to me like this is our 1, 2. And that would give me another 1, 2, another 1, 2, yet another 1, 2, or another whole 1, 2 move here, another 1, 2. And then we're heading out and up to our 3. We're coming back in. So that puts us inside of some kind of diagonal type affair, and we're doing this kind of chop.
Right.
So at this point, if that's correct, then we could chop up and down in here, you see, without ever breaking even this low.
Right.
So that would be my hope for Mr. Musk and this company, is that we don't come back down and break this low, because if we break this low there, then that's not good either, right?
Right.
We don't even want to break this one at 182, because again, we're coming back too deep into this area. So I'd like to see them turn around in this area. So let's go down to the weekly time frame and take a good look at this, and that will help us to see. All right, so looking at these gaps, this is the gap, the last gasp. Put an S in there, the last gasp before we break through. We don't want to see that happen. We don't want to see them break through this, So this gap is holding right now. We've wicked through it, but we haven't closed below it. So if we can stay in it without closing below it, then we have a fighting chance that we could see a rebound. Right. However, this is a big however. What do we have up here? You have this huge 1, 2, 3 here. So that's a nasty. And the reason why it's a nasty is because if this is a 1, 2, 3, and we've dropped to this level, yes, we can bounce here. We could bounce and come all the way back up even. They can make it look really good, but we could still come back down and take out this low. You see?
Yeah.
Because our structure says that we should do that. We would expect that. So, right? And we don't know what they're going to do here. It could be like that, or it could just be like this. We don't know what they're going to do. So at this point, we could expect some kind of, manipulation, gyration stuff going on in here. And then eventually they might take out this low. But it doesn't mean that they have to take out this low.
Right. Yep.
So I've got a like 1, 2 here. I can see that this, it's a pretty weird looking thing, but that's a 1, 2, another 1, 2 here, like I was saying. Then this big, huge move to the third wave. So, coming back into this area is not so great. Not so great, but there is a gap there. We've come back into it. So, yeah, I could see some gyration in here, maybe one more drop. And maybe they'll take that low out. And that's might be okay. And it might just be a wick like that,
Right.
And then we head back up.
Okay.
That's what I would love to see and I would expect, but there's no guarantee, right? Because we have this huge 1, 2, 3 here. This 1, 2, 3, the height of it, the fifth wave is usually the same height. So that says we can go quite a ways down here, right? Or more. Right?
Yeah. In which case we
the same height as what, Lennox? The same height as what? What is what? I'm sorry.
Okay. So I have this first wave here, this height of this first wave up here, that's the height. So the fifth wave could be that high as well. You see?
Wow,
So you see it's putting us way down here. You
Wow.
understand?
Yeah, I get it.
So
Which
typically,
is about 145.
yeah, typically the 1, 2, 3, that height of this wave is usually the same height as the fifth wave. So if that's the case, then we could see price doing that and coming down to this level and taking out this low even and so forth, which is nasty. But still not totally, terrible, because again, they can just wick it here and then turn it around and continue back up again.
Yeah, my thinking is that it might wick all the way down to 140, 145 there.
It's totally, you can see, like from what I've shown, that is totally a possibility that can happen. You cannot rule that out, and you have to look at all the possibilities. And so, yeah. But right now we're at a fourth wave area. It looks like we're starting to, especially if we can see the current weekly candle close back above this candle, then we would know that we're in a fourth wave area. We could do gyrations like that, maybe come back up into this gap, something like that, and then drop one more time down.
Right.
That seems like a typical. And again, remember the height of that can be from here to here. You see?
Uh-huh.
It doesn't have to be from down here to here.
Right.
It's going to be from wherever this ends, where the four ends.
Right.
So we've got 1, 2, 3, 4. So the five can be just this length. So we could just come down to that level, or maybe they'll take that low out with a wick tail and then push us back up again.
Right.
So those are the possibilities there.
Great.
This looks like a nice looking, reasonable type of movement. There is a gap right here. So this looks like a nice movement back into that area, and then a drop to take them all out, and then a turnaround to go back up.
So I'm going to go away and play for the summertime. It says go away and play in May, doesn't it?
So that's, yeah. So coming down the time frames on the daily, we've got the 1, 2, 3 top, and this whole thing becomes a 1, 2, 3 top. We've 1, 2, 3, 4, 5 waves down. Looks like we're starting to go sideways a little bit. And yeah, we could be stuck in a range here between, say, 200 and 280,
right,
260, whatever, for a while, possibly.
Right.
Hard to say, right, what they're going to do, because whenever we come to the fourth wave, it's very difficult to predict what they're going to do there.
Mm-hmm.
So are the market makers sitting there and and plotting out, okay, let's make one of these? Do they do that, or what? I don't know, right? Do they actually plan this thing out beforehand and so forth? You know what I mean? I don't know. Or is it just market forces that are making these patterns? Because the patterns are always, seem consistent, right? So it's quite interesting. The question I always have to ask myself. So there's the fourth wave. We're chopping up a little bit. There's the hourly. We're chopping. You can see on the hourly, we're definitely chopping up like crazy. So we're getting this huge chop, not like what we did coming down. It's just quick moves. Now we're chopping sideways. So we're definitely in a fourth wave area now. So we could expect that these equal highs up here are in the sights. Equal lows here could be in sights. So they might do this first and then go back up, or they might do this first and come down. We don't know yet, right?
Yeah. Yeah, there's a good chance of some liquidity higher up right now.
Yeah, there's equal highs here, so this is enticing, but there are equal lows here too. So
yeah.
So which one would they go first to get? So you have to kind of follow the trajectory And since we've come back down to you draw a channel like that, since we've come back down to the bottom of the channel, I would expect that more than likely we're going to go back up to the top of the channel before we come back down again.
Right.
But again, it's very choppy. The indices will help us to figure this out too, because whatever the indices are doing, Tesla's going to be doing.
Right. Yeah, the NAS right now is down 0.68 and Tesla's down 1.68.
So right now it's pointing to the downside completely, right? You can see it. So looks like they're heading for these lows first. Interesting. Possibly, and I say possibly because this is a midpoint area. This is a 1, 2, 3 at this point. We came all the way up here. They're chopping it, see? So we could still do that. They can take out these lows and not come back into this area. See? So that's looking more realistic. This 1, 2, 3, and then we get this chop A, B, C, D, E, and then we get this move back out. The upside to take out the highs.
Yeah, I think I'm going to cover my short right in here.
Again, if they're coming down, they're more than likely going to take this liquidity here. So you should be okay to below 230 here.
Yeah, okay.
Just looking at that. So, and you can see right away, if I draw a line here on this low, you can see if I drop to the 5-minute, same thing like in the NAS, we had a 1, 2, 3 right here. So since we have a 1, 2, 3 there, this is in jeopardy, this low, because we should take it out. So here we had a 1, 2, 3, and a 1, 2, 3. So this drop tells me that we should take this low out, because my structure says that should be taken out. So I get this move up, we should come down and take this low out.
Yeah, I had set it up to take the low out at about, just below 230.
Yes, that's where I would be setting my target. Now we saw what the NAS did, and how they, like at this point here, similar to the NAS, get 1, 2, 1, 2 drop. So at this point when it goes back up, we're kind of thinking, okay, it's going to just do it right now. You see, but they say no, let's mess them up. That's what they're doing. They're saying, no, let's just mess these guys up and get them to think that we're going back up. So they induce everybody to buy in here. So where's everybody going to put their stops, right? Everybody's buying, jumping and buying. And especially when they break through these gaps, it looks really, oh boy, I'm totally wrong, it's going up, and everybody's jumping in, and then they come back and take you out. It's perfect. It's a perfect ploy.
233. Very good. Well, thank you so much. That's really good.
Yeah, I mean, I hope that helps. That's the way you have to kind of break the chart down and really look at it and make a decision as to, okay, what is it going to do? And you have to look at number of different possibilities too, right? It's not just one possibility.
Yeah, I agree.
That's what makes it tough, and that's what makes it fun.
There was a call by a prognosticator that Tesla was going to be 145, and I went, "Wow, that would be incredible." And I can see why it might hit there, and your explanation really helps to see, what the possibilities are. So,
yeah, well, he could be totally correct. I mean, 138.80 is this low right here, so 138.80 is certainly a possibility.
Yeah.
Yeah, and below.
Yeah, we just need some more dramatic bad news. Well, lots more Teslas being torched and riots and all that jazz. And
well, I told you I brought home a Tesla yesterday.
yeah, you said you parked it next to your neighbor,
and I get a knock at the door, and my neighbor said, "Do you park a Tesla beside my car?"
Can
Hilarious.
you please move it a little further away?
I haven't gone out to look at it today yet, so it might not be there. Just a molten piece of tin on the ground.
Yeah, I feel sorry for all
Look
these.
what
peasants.
NAS is doing, Lennox.
Oh, I'm sorry, the NAS. Let's see. Okay, so let me get my bearings here. Okay, so we were way down here. All right, so we go back down on the 1 minute. All right. Oh my. Okay, so yeah, I was looking for. I could have gone for a lower target here below these lows because the 1, 2, 3 said I should go lower, but you don't have to be greedy. You can just take your profits at the lows and so forth, and so now we've got a nice 1, 2, 3 bottom. So are we heading back up or what? Let's take a look at it. I'm going to go up to the hourly just to kind of get my bearings. Okay, so remember, we're still looking at the 4-hour candle. The 4-hour candle is the key. I can't reiterate that enough, guys. Like, seriously.
Is it always the key?
Always the key. I could say the daily candle as well. The daily candle is huge too, because if you can pinpoint what the daily candle is doing, then it would help you, figure out what's going on. Because you look at the last 3 daily candles here, and you can see that the middle candle, we opened at the bottom, we went down low first, so we made a wick. So if you can see that, you want to get in on the wick. We want to find a 1, 2, 3, and I should say tail because George likes to use tail. We want to get in on a 1, 2, 3 on the tail and catch the ride. So if you could do that, just think about that for a minute, right? If you can get in on the tail of that candle right there, just get in there with a 1, 2, 3, right? You can ride that up to the high of the previous candle. You see?
Right.
It's huge. But you have to go down to the 15-minute or the 5-minute or the 1 minute to do that. But if you can pinpoint that, that's what's going on. So the current candle, we look at the current candle and say, okay, where did the current candle open? It opened right where the previous candle closed, and then it went up first. You see, it went up first. So if it went up first, it made a wick. So it made a wick, but it couldn't take out the high of the previous candle. So it's saying that because it couldn't take out the high of the previous candle, that there is weakness here, lots. And so we would expect that it's going to go down to take out the low of the candle. So there's room for this to come all the way down. That's why this 4th wave works. See, they're coming back down to take out these lows. So you don't want to be fooled when you go down to the lower time frame, and because you get a 1, 2, 3 bottom, you want to start going way up. You can take a 1, 2, 3 bottom, but don't go very far with it. You understand? Because you're going counter. So the move that we're looking for is a move to the downside. So if that makes sense. So if I go to the 4-hour, the move that we're looking for, because we can see that we're inside a 4th wave, the move that we're looking for is to get out of the 4th wave to the downside. So the close targets right now are here, here, here. Those are the closest targets. This being number 1, of course, right? So now that we understand that, and we're looking for tops, 1, 2, 3 tops only, we're looking for 1, 2, 3 tops only. So if you're on the hourly and you can spot a 1, 2, 3 top, you can take that trade to the downside, but you can't really see one on the hourly. So let's go to the 30.
Are they the 4-hour candles or what?
Sorry?
Are they the 4-hour candles?
Are they what? To the right?
Yeah.
Yes, these 3 candles are the 4-hour candles.
Okay.
Yeah. So we're looking for 1, 2, 3 tops. So on the hourly, I can't really see a 1, 2, 3 top. I know there's one there, but I can't really make, you can't really see it, right? 30-minute time frame. I can see a 1, 2, 3 top there, but it's still not as clear as I would like. 15-minute time frame. There's a 1, 2, 3. I can see it now much clearer.
Right.
Get this big drop down. So I don't want to be buying. I don't want to buy. Yes, you can, on the like down on the 1 minute or the seconds chart, you can buy, but you're going counter trend because we want to take out these lows here, right? We want to take out these lows. So to buy in here, yes, you can make quick money buying and so forth, but the real play is to the downside to take out these lows. All right, so now I'm going to go to the 5 minute time frame. Okay, so now on the 5 minute, again, we don't really want to be buying in here. Yes, you can because on the lower time frame, but we want to take out this low over here. So we want to sell to come down, right? So now we can see our 1, 2, 3, you know, and we can see the move down and they're chopping up and down and it's messy. But in here, we want to sell. We just want to sell. So we just want to sell. That's what makes this game tough because they induce you to go long in here. They make, you know, you make the 1, 2, 3, and they induce traders to jump in, put their stops here, then they take you out. They induce you to go long again. Everybody puts their stops under here, and then they go up here. They take out the highs maybe, and then they make a 1, 2, 3, and they come back and take everybody out. That's the game. So it's an inducement. And this was a nice inducement, right? This is a nice entry to go long. Certainly, like I say, you can play to the upside on the 1 minute, but you're going counter. But that's nice profit there. So if that makes any sense, you know, again, the ICT guys, you know, I know that ICT is huge out there on YouTube, and you guys are probably on YouTube watching me and saying, yeah, but ICT wouldn't do. They're looking at a specific time, you know, at 11 o'clock or 10 o'clock or 9 o'clock or whatever. They're looking at a time and saying, oh, let's look for this turtle soup at this particular time. But I'm saying that it doesn't have to be a specific time. 1, 2, 3s occur all the time. So if you can catch one, take the money. If you can catch one, take the money. You don't have to sit here waiting for a specific time and waiting for one setup that you miss and then, oh, okay, I'll come back tomorrow and wait for that time. That's silly. There's money to be made all the time. So why sit and wait for one time of the day and then you miss it and then you have to wait for another day? Yeah, you could do that, certainly, right? Nothing wrong with doing that. But
we're 2 minutes left in the macro.
we're at the last hour already. Wow. So we're chatting away all day here today. We were inside at 2 o'clock. 2 o'clock is the algo. So the algo kicked in here at 2 o'clock. And there wasn't much of an algo in here until we got this 1, 2, 3 top. Then we got this drop. So the algo kicked in over here after 2 o'clock. So it's a quick algo to the bottom. Now they come back up real quick, and now they're dropping it. So at this point, you know, this is almost like Tesla. We just looked at Tesla when we looked at the monthly. This is almost identical here. You see how they come down. So what would we expect? You remember you said, Armin, there's a big 1, 2, 3 there. So because we had this move up and we come down, we would look for another move back up to take out these highs. However, they've come back into this area. You see?
Yep.
When they come back in here, it kind of, this move back up becomes less probable. You understand?
Yeah.
You can see that. I mean, it's just logical. Like, it's like, okay, they've come back so deep. Maybe, you know, if they do try to get back out there, it's going to be, you know, harder. You understand?
Yep. Well,
if they had turned here, if they had turned at this point, it would be easier for them to come back out.
if you go out to the 5 again, you can maybe see a bit broader picture again, right?
If you want to go up to the 5, what I'm looking for them to do is to take out these lows. So take out these lows here first.
Yep.
And then the next low at that point. So that's the short-term goal here. The short-term goal is this guy. So I'll mark that. Get it there. All right, so this was very quick. So on the seconds chart, if I were down on the seconds chart, I would have been able to get into a 1, 2, 3 here, or just use the fractal entry. The fractal entry again is just
I
fractal
got
high.
it pretty much at the open of that first red candle.
Yeah, or just a breach of the previous candle. I'm in on that move. So my risk is very small at that point. So I love those entries. It is a 1, 2, 3, but you can't see it on this time frame. You have to drop down to the seconds chart to see it. So here they're giving everybody a second chance to get in. They come back into this gap, so you can get in at this point to continue down.
That's still a good move.
Oh, totally. I mean, it is definitely. So they're giving the buyers or the sellers. Buyers right now, they're giving them a chance because they went down without any buying in here. See, all this was just selling. So they make these gaps because it was only selling. So they give the buyers a chance to come back up, and that's what they're doing. So there's another one up here too, right? So they could even go up into there. If they do that, that's even a better sell. So you want to make a sell when they're moving up. You want to make a buy when they're moving down. And that's difficult to do for most people because it's against your mind. Like, what do you mean sell when they're moving up? But that's the whole point of the exercise. You want to sell when price is going up. It seems counterintuitive, but it's not. So they came back into this gap. I'm not even pressing buy or sell. I'm just trying to show you guys right now. Like, this is how I kind of look at it. So at this point, you could sell in here. There's another gap above. So are they going to go back up to that one? They could, right? There's still a possibility that they could do that. Because here at this point, it wasn't a sweep. It's a 1, 2 here. So this could be 3, 4, and we could go up one more time. So I'm going to look at S&P right here, just real quick. So you see S&P, there's divergence. You see the trick here? Let me go to the S&P and the NASDAQ chart together, and let's show you what I'm talking about here. Sorry about this, guys. No, that's not. Okay, what happened there? My charts are all messed up. Sorry. Okay, this Euro JPY, what's this one? Euro USD. Okay, so I'm not sure what happened with my charts here. I have to switch this back to this way and put my NAS on that one and S&P on this one. Okay, on the 1 minute time frame. So this is quite interesting here because this is the little tricks that they do to mess you up. So at this point on the NAS and here on the S&P, oh no, they were the same. Okay, so we didn't get divergence. They were the same. So they're making a 1, 2, 3 bottom right there. See, so because this one's lower, the red candle is lower than the blue candle. It's a quick 1, 2, 3, then they go up. So we're in a fourth wave right now. We're looking for a push back up, perhaps to take out that high. I say perhaps because there's no guarantee that they're going to take out that high. That's what we would expect, though. And I'm saying we expect that because that's what we expect in our structure. When I started learning about Elliott wave, the fifth wave not completing the rule is about 11% of the time. 11% of the time, the fifth wave does not consummate. They don't break that point and make a fifth wave. 11%. That's not very, very high. But I see it more frequently nowadays. Like back in the 90s and the 2000s and so forth, this didn't happen very often. It was very rare to see the fifth wave not being broken, not being made. Now it happens more often than not. So I think it's probably doubled, you know, maybe 22% now of the time that we see this occurring, that we don't get that fifth wave. So I'm always expecting a fifth wave, but I have to always be cautious and think, okay, maybe it's not going to happen. So here they're doing it, right? They're pushing up to take out that high. So that's what I would expect. Now, this is where they trick us, because we could see S&P not doing it and NASDAQ doing it. So NASDAQ can take out the high, and then S&P won't take out the high. And that's where they trick everybody. That's the divergence that they do. People call it smart money trading or whatever, SMT. But yeah, that's what they're doing. They're tricking you. So there's NASDAQ taking out the high. Okay, they both did it. So, okay, so we're okay on that one. So sometimes they don't do that though. So that's what I would expect. So now I feel confident to jump in and sell. You see?
Yeah, this is a good sell at this point.
Yeah. So that makes sense to everybody. And there's a gap there. So that's the gap. I thought, okay, they could come back into that gap. So if they come up into that gap, this is a perfect sell opportunity at that time, because they're moving out into the gap.
There's 4 minutes left in the macro.
So that's why I just kind of say, okay, at this point, when I get that move, I'm gonna go back to the NAS. There's my gap. We've touched the gap. This would be a sell at that point. So we're pretty close at this point. So let me just try a sell here. Let's see if they'll go back in one more time. This is where my second charts comes in handy for me, because I can go to my seconds chart. I can see exactly what they're doing. Seconds chart, and I can say, okay, I see they're gonna push back in there one more time, because the seconds chart is just telling me, or it might be just in a fourth wave at this point, and they're gonna still push one more time up into that level. So sometimes it'll tell me and give me that. And that's what ICT Michael does as well. He goes down to the seconds chart and he can pinpoint exactly when the candles and the wicks are moving into perfect balance, into gaps and order blocks and things that he uses. And he can say, okay, I'm going to get in right now. And people watching him on the 1 minute chart think, why is he getting in there? Doesn't make any sense, but it makes sense because he's down on the seconds chart doing it. So I didn't take the trade because I was looking for one more touch of that. And that's being nickel and diming myself out of a trade. So at this point, what does it matter if I jump in the trade here or if I jump in the trade here? It's like nothing. So I should just be taking the trade. So this is one of the things I want to show you as well. Don't nickel and dime yourself when you come close to the area. Take the trade.
Well, that's why
drawdown is so small.
I'll put a limit order in on that.
Yeah, the limit orders are great at that point, right? Because you set it, and ICT always says set your limit order one tick below, in this case, below that gap. Set it one tick below, because sometimes they don't go into the gap. And why will they not go into the gap? Because the candle that started the gap right here, they close below the candle in the middle. And because they close down there, doesn't mean that they have to come back into the gap. And in this case, they just touched it. But it's not too late to get in even at this point, you see? Because if you know that your target is
way down.
Yeah, your target's way down here.
Yeah.
You know, you still can get in. So all you have to do is wait for a retrace. And then you get in and catch the move. So if you're confident, you don't worry about missing. You think, okay, no problem, I missed that. Let's wait for the retrace. They're going to come back. There are gaps here. They're going to come back into one of these gaps more than likely, hopefully, and you can just jump in and catch the move.
My charger.
There you go, right now.
So that's kind of how you skin the cat. But sometimes I think I'm just
finished. So
this is such a tough thing to explain and show, because the way I'm seeing the chart is. So now that's a nice retrace. So I would take the trade right there. I retrace back into the middle area of the gap. So that's a good
233.
Area to take a trade around the midpoint. So they're going higher. So if they go higher, I could always add to my position because it's going up higher and so forth. So I do that sometimes if I feel really confident that they're gonna come back down and take out that low, take out these lows, take out these lows, then I can jump back in and so on. So you have that option. Where's my stop placement? Most of the time I don't even put the stop on, but I'm not going to say that to people, don't put a stop on. I think it's very good practice to put a stop on, because it's better to take a small loss than to be crying later that, oh, I should have put a stop on. Right? So it's a lot of shoulda, coulda, woulda. And you didn't, and now you're crying, right? And believe me, I've cried in this game. So there's no mercy here. They don't care about you whatsoever. It's like, wow, are you kidding me? I'm down $9,000. What? I should have put a stop on. So we're looking for this to drop now, because I've got a 1, 2, 3 top, and they're giving everybody a chance to get in, lots. So unless they're taking this high again, which is possible, I could be in jeopardy. My stop, technically, if I'm using this gap, technically speaking, my stop should be above the high. I don't like that. It's too far. It's too far from where I entered, so that's too big. But that's technically where you're supposed to put your stop. You could use the middle candle as the high. That's still too high, too far. They're not dropping it very fast, and don't like that when they don't do that. Whenever they hang out in here, whenever you enter a trade and they hang out for a while, it's not a good sign. Usually, if you're correct, you get a nice 1, 2, 3, and they should be going quickly. You get a 1, 2, 3 like here, they go quickly. That's what you want to see. You don't want to hang out. Like here, you get this move back and a little bit of a hangout, and then boom. That's what you want to see. So when they hang out too long, George and I came up with the 7 candle rule. If you get 7 candles after your entry, so let's say this was my entry candle, 7 candles, 1, 2, 3, 4, 5, 6, 7. If you haven't left and taken out this low, you're still in this area. You need to exit your trade or think about it anyways.
Would you say that there's a 1, 2, 3 forming on the 1 minute Tesla, Lennox?
It's almost identical to the NAS here. So we do have a 1, 2, 3, but they're playing around up here quite a bit. So are they looking to go higher? Or what, So I don't like the way they're playing around in here. But there is a 1, 2, 3 there. There's also a 1, 2, 3 this way too, right? So.
But we're in wave 4.
It's a bit messy here. Yeah. So they could still go up and take out this high, and I could be in jeopardy on my trade.
We're in wave 4 on the 1 minute.
See what it looks like on the 5. So on the 5, we're in a wave 4, but we're in a wave 4 the opposite way. We've got a 1, 2 here. We're down here. They're chopping it up and down. So that's why we could be in jeopardy in here, because they can chop it and wick you out because there are gaps up here. So they can easily wick you out of your position and then drop it down. See these gaps?
They're playing games right now.
Yeah, big time. So it's the 5 minute time frame that's telling you, okay, maybe I'm in jeopardy. So back to the 1 minute. Yeah, I mean they almost took me out there. So they've broken the 1, 2, 3. So there's no longer a 1, 2, 3 top anymore. It's broken. So this has got to be a new 1, 2, 3 to form here for me to come down. So it's a little messed up. So they made this move, they made that move. They're slowly grinding up, it looks like. So they might be heading to take out that high. That would give us the structure, see? But they do it in a more exaggerated way. You see? They're doing it like that. So they're in a channel. Do you understand? It's not a impulse. So that's why you can get taken out. If it was an impulse, it's a different story. So yeah, so I'm taken out. So they're heading to take out the high. Very, very sneaky, smart way that they've done this. So you think that, oh yeah, I see what they're doing and everything like that, but then it's like, oh, messed me up.
Then take out the prior high and then drop.
That's what they're doing. They're inside a channel like this, and they're chopping it. That's why they came back into this area. So this is not what you want to see if it's an impulse. That's what we're looking for primarily, is an impulse wave. But they've made it into a channel, so they're heading to take out the high. So on Tesla, when we looked at the weekly time frame and looked at that same pattern, right, like that on the weekly or the monthly, remember we looked at it and we were sitting right at this spot. This is what they can do as well. They can do the same thing and chop it back up that way. So if I go back to Tesla and go to the monthly, or I think it was the monthly that we looked at that same pattern. Yeah, there it is, similar, right? So there's that move, and then they go up and they come all the way back into this area. So it's the same thing, just on the 1 minute. Because they come back in here, they can still go back to take out this high, but they'll do it in a choppy way like that. See, same kind of thing. And that will still give us a structure, but it's not a structure that we're expecting where we're going to go straight up like that. They kind of mess you up. So this is possible that this is the bottom here, Armin. Possible. And we're just inside of a structure like this. Maybe it's a fan, like, you know, a trumpet. So there's a number of possibilities. So let's see if they take out that high. So I'm still looking to sell, but they're going up first to take out the high. Let's see what S&P is doing at the same spot. S&P is very close to the.
You mentioned my name and it it froze me out, so I had to come back in.
Sometimes I wonder if what I'm talking about and so forth makes any sense to anybody at all. Like, really, it's just
the big boys are watching you, and they're actually screwing you up by going, "Oh, let's do." He's saying it's going to go down now, so let's like put a bunch of buying pressure in there. We'll...
But it might be watching Michael Huddleston doing that. I'm sure, because he's big out there on YouTube, right? So maybe they're doing that to him. But I mean, and he kind of makes it sound like that's what they're doing. They're watching him and so forth, and so I don't know.
It all makes sense to me.
Yeah, this is not easy to grasp. You know, I know this is they say this is one of the most difficult things to learn. Yeah, so we've taken out that high. So I'm looking for a 1, 2, 3 top now. You know, trading is one of the most difficult things to learn, I am told. I've been told. So
unless you have a teacher like you.
235.
I don't know, Peter. Again, half the time I think, you know, my wife keeps telling me, "Why are you doing this? Just trade and forget teaching," because it's so difficult, right?
No, we need you here, Lennox.
But you know, I understand what she's saying, but I like to explain it.
We have our 1, 2, 3 high. Well, wait a minute.
So they're looking to take out the next high. So why are they doing that? Let's see what they're doing. Okay, so we've got relatively equal highs here, so they're going back up to take those
I have
guys.
a 1, 2, 3 high top on the tick chart.
Yeah, so you have to be checking everything, right? And
Yeah.
you know, a lot of times we forget about the higher time frames and so forth. There's equal highs here as well. I mean, are they going to stretch to go all the way back up there? That's totally possible. You know, they could do that. The structure right now is not pretty, so they kind of made it difficult here today. You guys can see the first 1, 2, 3.
They just made a new high.
And now it's really messy in here.
Sure is.
Let's see S&P, how it compares.
Origin. Cash.
S&P is identical. And let's see Tesla, how that compares.
Origin.
Tesla is really messy. So Tesla looks, I like Tesla because they're setting it up to fall here. It looks more so. I can see the 1, 2, 3. I'm on the 5 minute and just move up. So I'm expecting them to bring it back down. So I'd be really looking hard for a 1, 2, 3 right in here to come down.
Yeah, the tick chart made it 1, 2, 3 high now. Again, if it stays.
Okay, so they've just touched that high. They didn't go through. Interesting. So they didn't take the high yet. So, you know, remember when I said we're looking just for sells primarily? You could buy this, but you know, it's very tough. It's choppy and messy, and you know, this was the best opportunity right there for that buy. Other than that, it's very difficult. I caught that sell here, That was nice.
A lot of chop right now.
Very choppy and messy. This is like the Asian session where they chop you up and down like crazy. So if we were to do this, the technical way to find the mechanical way to find our 1, 2, 3 top, then you have to wait for the break of a previous low. So at
They
this
gave
point,
me my first profit.
you wait for the break of that previous low, like that, a closure below preferably, and then a retrace back into a gap preferably.
Second profit.
George is just killing it here, and then that move. So that's the technical way of waiting and entering the trade rather than trying to catch right at the top with the fractal. I like to catch the top with the fractal, but it's dangerous. So let's see if we can do it the proper way here on this move. All right, so they came back below the low, but they were not closing below that low. So they don't have to close below the low, but we'd rather that they did. So we've got a sweep. So that's what we're looking for, a sweep, another sweep here, and then a retrace back into a gap. So which gap? There's a huge gap there. There's also an inverted gap. So I like the inverted gaps. So if they could come back up to the inverted gap, that would be bonus, because that puts you in a good area for an entry with little risk compared to entering here where you have higher risk. So it's just logical assessment, analysis of it. All right, so are we going to get a closure? So we want to see a closure below, because if we close below this low, it says that this high is really strong. So it's a strong high, and we shouldn't go back and take it out.
So far, that's what I'm getting, is that the high should remain
But
okay.
if they don't close below, then it's possible for them to go back up and take that high. And why would they take the high again? Well, they didn't take it here. They just tied it. So that does a lot. Let's see the number.
So
718.
what makes that particular low any different from the other change in structure lows? That is
From these other lows here?
Yeah.
Because this was the low, the last down low, created a fractal before the move to the upside that took out the high. So there wasn't another one. There wasn't a fractal low anywhere else here. And I'm talking about a swing low. You see through the lower, the low, and then the higher low on each side.
Yes.
Yeah, there wasn't another one here. See?
Okay.
So because there wasn't one, this is the one.
I got closure on all.
So we got closure below now. So now I'm looking for a retrace back into this gap here that they've painted for me. I've got a change of character, it says right here. So there you see the indicator that I'm using is using this one as a change of character rather than this one. Interesting. I would use this one because this was the first one, but the indicator is pointing to this one. In either case, now I'm just looking for a retrace back up into the gap. So this is a technical way of entering the trade and catching a 1, 2, 3 to come down. And what George does with his, if we get a 1, 2, 3 and we get a move back up into the gap, George would put his stop above the high. So he's taking a big risk if he enters at this point, right?
Yeah.
If price decides, okay, no, I'm not done, then he's a big risk. So you have to make a decision. Do you want to do that? You can use the gap as your decision point. So you could use that candle right there as your stop. So your risk is a little less, but you also take a risk that they can take you out with a wick. So there's never any guarantees. Now I also remember I said I saw a inverted gap here. I like the inverted gaps. So maybe they might push back up into the inverted gap, but we'll see what they do here. So this is looking like a pretty nice setup coming up here. Look at them moving back up with lots of gusto.
Boy, when you see it on a tick chart, the movement is really amazingly fast. I'm glad I got closed out where I got closed out.
So as I'm watching this now, on the seconds chart, this is a 1, 2, 3 right here. So now I'm in the third wave. So I'm looking for them to make a little blip and then another little push up. So they could come up into that inverted gap. It's possible. So that's why I'm waiting. But the midpoint of this gap is reasonable as an entry, and we hit that already. So they could be done at that point, and they might not go up anymore. So it is a possibility that I just missed an opportunity to get in at that point. I'm looking for them to do the 1, 2, 3, 4, 5 wave though. I'm doing 1, 2, 3, 4. One more push. Will they do that and take out this high one more time? That's kind of what I'm looking to do. So by watching it on the seconds chart, this is where the little secret that Michael Huddleston does, and that's how he gets into these trades. So for me, I'm looking at the 1, 2, 3, 4, 5 wave move to take out this high, to take out that high. There are gaps here, so he's using and utilizing that information, and there's the order block there. So he's looking at price and he's saying, okay, price can come up, since we've come up into the first gap, we can certainly come up into this gap, maybe touch the order block, and then I would take my entry. So he's doing that, and it's beautiful. I mean,
I think we have a 1, 2, 3 top on the 1 minute Tesla.
everything looks pretty good here. I probably hoping for another move back up. It might not come to fruition, but I'm kind of hanging in there to see if they do it one more time. So again, I could be nickel and diming myself out of an entry by doing that. So a lot of times I do that. I'm sitting there waiting for one more, and then they don't do it because remember, 11% of the time they don't break into a fifth wave. So it's possible that they do it here on a seconds chart. Because what happens on the seconds chart happens on the monthly chart.
Your seconds chart is looking like my tick chart. Can you put that back on a second? Yeah. I'll put my tick chart in the room for you.
Yeah, I'm on the 10 seconds chart looking at this.
Okay,
So
well, I'm on a 233 tick chart.
So I'm looking for them to take out this high now, and then this high, and I would take my entry if they take out that high.
If you compare your 10-second tick chart, 10-second chart to my 233 tick,
It's practically the same, right?
how similar it is.
Yeah. And I can go down even, lower, 5 seconds and so forth. I can go down to the 5 seconds chart and look at
I can go lower too, but
and 5 seconds chart would give me even more pronounced pattern.
I find that the 233 works, especially when movement gets quite fast. It helps break it up so you can see what's going on with the candle development.
And this is what's happening on the 5 seconds in this area right here. I'm getting that 1, 2, 3. I'm getting that fourth wave right now. I'm looking for them to push back up one more time, take out these highs, take out these highs. So I can see what they're doing. So that's why I'm not jumping in at this point. I'm looking for them to come back up one more time to take out that high. Am I going to be correct? Maybe. I have to say maybe because there's no guarantee.
Yeah, well, that's like I called too soon the first time too.
It is my expectation, but there's no guarantee that it's going to happen. So they're doing it now. They're almost at the top. So I'd like to see them take that high.
Okay.
And maybe on the S&P, they've already taken that high. Okay, now they took it there. Let's see the S&P real quick. No, S&P, they haven't taken it yet. Oh, they just did. Okay, so there we go. So now I have a good opportunity for an entry. So I'll take an entry right there. So I'm a little bit above midpoint of the gap. They can still reach into the inverted gap. If they touch this inverted gap, I say, okay, let me sell some more because of my expectations that they're going to fall. But again, no guarantee whatsoever. So now I put my stop in above the candle that made the gap. And is that going to be safe? No, there's no safe because they can wick it and take me out.
Gentlemen, I have to go. The boss needs some help.
All right.
See you tomorrow.
All right, George. Thanks for dropping in. Appreciate it.
Now, everyone. Good trade.
Have a good rest of the day.
Good night, George.
So we've touched that inverted gap. This is where I said I really would like to have gotten to the inverted gap. Did I really believe we were going to get up there? It was a possibility. I didn't know for sure if we're going to do it or not. But so now can we get that drop? My stop is a bit tight. I could say, okay, let me give it more room. I'll go maybe almost to the top of the, without going to the high. Just put it there above the wicks of those candles, just in case they wick it, because they're wicked. And they'll do that. They'll wick it up there and take you out. So looking for them to come straight down now. And you're saying Tesla is got a 1, 2, 3 top. It didn't take out that high. Let's see how it looks on the 5. So I like Tesla, remember I said, because of this 1, 2, 3 right here. So this drop, this chops us up. So this is looking like, yeah, we should come down, take out these lows. That would be the trajectory. So we could get in 234.50 area, and you could get out at 230. Not bad. So for Tesla, we need to break this low here. Similar to what we were looking at on the NAS, we need to break that low to really get a good, strong feeling that, yeah, this is it. They're going to go down for sure. There is an inverted gap right there. They came right back into that inverted gap. And they also came back into this gap right there. So that was perfect. I'm getting that drop. So everything looks pretty good on Tesla there for us to continue down. How's our NAS doing? Okay, NAS is slowly getting down there. So I'd be looking to take something off, maybe on the breach of that low or here. Oh, wow, it's 12:40. So we only have 10 minutes before the macro today. I wouldn't expect them to take that high out again, but anything's possible here, of course.
I'm looking at Bitcoin in a fourth wave as well, to the downside.
Yeah, we really haven't looked at Bitcoin today.
But it's going up like it want to create a E-leg before it continue down.
Okay, so Bitcoin, they're taking out on the 1 minute, taking out those highs, equal highs there. So we look like we want to be coming back down. Let's see the 5. Oh, the 5 minute, we're definitely in the fourth wave. Okay? So there's our first wave, 1, 2, and then we drop. And then we're chopping up and down in this mess that we're in here. Look at how choppy and messy that is.
So Lennox, this is what I'm thinking, that if based on that we are not in premium, so they could go push up higher. We would not be in premium for ourselves.
There's no reason for them to specifically push back up higher because they're not in premium or anything like that. That doesn't say anything. The only thing that would have them push back up again is to take out the liquidity above. So liquidity here. So if there's reason for them to come back up, there's an order block here. This gap has already been mitigated, so there's that gap right there. So yeah, they could certainly push back up to there if there was reason for them to come back to this order block gap, right? But
okay.
But there has to be some reason for them.
To
have to come back up. Why would they come all the way back up here? It doesn't seem like a reasonable thing. It's possible, of course. I mean, this 1, 2, 3 could take us back up there, certainly, right?
Okay.
So you can't rule it out, but you have to kind of say, why would they? Ask yourself, why would they go back way up here? And yeah, maybe maybe they're going to come back up to pick up some orders up here for whatever reason. I mean, when you're selling, you want the cheapest prices, right?
Yeah.
So it's best for you to get the prices that are up here rather than be selling down in here. So yeah, they can do that. But once they take these two out, you would think that should be enough for them to continue back down at this point. They shouldn't need to go any higher than that, really. But there are order blocks here. There is a gap here. So yeah, it's possible. You have to look at that.
They would be enticing a lot of buyers. So and then they turn it around.
Yes.
When you least suspect.
That's the inducement. Yes.
Yeah.
So you have to take that into consideration. So now they've swept all these guys out. So you look at your structure and you think, okay, the structure says I've done 1, 2, 3, 4 impulse. Look at that. We didn't come into it. See, this is what I mean. This is now we got an impulse wave, and then we're looking. Since we get this move right there, if we were at the right edge of the screen on that move, if I was at the right edge of the screen and I saw that, what would I be expecting if I saw this move and I see this big blue candle right there on the right edge? I wouldn't be expecting anything but a move back up to take out the high, because my structure says that should be a play to the upside to take out that high. So I would be looking to jump in right there to catch that move to the upside. And you can do that all the time because, oh, so NASDAQ, I'm wrong. They've gone back up again. So they're messing us up in there.
They're doing the same thing that they were doing on Bitcoin.
Yes, they're pushing it up. So the same thing here. If I see a 1, 2, 3 at this point, like that, let's say to that candle. If you see a 1, 2, 3, you know, are you willing to take the risk to jump in to go short to take out these lows? That will be the expectation if you get a 1, 2, 3 at this point. Yeah, we're in a choppy area, so you have to really be careful because of that. But that will be, would you do that, right? And where would you take your profit off? So move to the side. You know, you have to be quick. So that low, you wouldn't even make it to that low. You see what happens? So yeah, so this move would have been beautiful. Nice move back to the upside. So they're going higher, certainly. But we know that the 5 waves has to end. So 1, 2, 3, 4. We know that we're going to end. So they sweep this high. We should be very close to an end. We should be looking for a 1, 2, 3 here to come back down now on Bitcoin. So this would be a nice sell on Bitcoin, even right at this point. So I'm going to take the sell on Bitcoin right there because I like the setup. So I've got a fractal. They've moved 5 waves up. My stop would be above the high. So I take that risk all day long. Will I be right? I don't know, right?
On the 5 minute, it looks like it's 1, 2, 3 to the upside with both sweeps.
So let's go to the 5 minute, look at it. So on the 5 minute, yes, it does look at this point like a 1, 2, 3 bottom when we're heading up, right? Is that so though? On the 1 minute, it says we're done on that move and we're coming back down. So we've swept all the highs out on the 5 minute. So it looks like a possibility that we could turn back to the downside. So the 1 minute saying, yes, we've swept the highs, we could turn around and come back down. The 5 minute is saying, oh, maybe it's a 1, 2, 3 bottom, we could go higher. So which one's going to be correct, right?
On the 1 hour, we're also in the pullback, which can take us up to the 38%, as you say.
And I'm wrong right now because they've taken me out on that. They give me a nice pin bar, a nice fractal, and they've come back and taken me out. So this is the risk you take doing that kind of play, right? And again, I don't mind taking those risks because if I'm correct and I've analyzed it properly and this is the top, then it should come down and take out all these lows. But you have to analyze it properly. Sometimes they fool you and then they come back and take you out one more time and then drop without you. So you're saying that on the hourly, the hourly tells me right away that we should be looking to take out this low. So this is telling me that there's a 1, 2, 3 here. We've dropped, we're chopping up in this move and we should be coming down one more time. So that's what the hourly is telling me. So I've got a 1, 2, 3 here. Or this whole thing is a 1, 2, 3, and we're dropping. So I'd be looking for sells rather than for buying at this point. Yes, we could go up a little more, but it's certainly looking more so that we should be selling rather than buying after such a big drop. So there's a gap there on the 30. We're right into the middle of the gap on the 30. We've swept these guys out. So I'll be looking for a sell here. I had this other gap marked off from earlier. So, and this is a 4th wave, very flat. We've swept these highs. Everything's pointing to a move to the downside. Again, we've got a nice setup. So I'm gonna try it again because I really believe we're gonna fall here. So I'll take the risk twice. If I stop above the high.
I'd wait till it touched that 38% on that last impulse candle. And then I'd be a lot more gung-ho about taking it to the downside.
Okay, so I'm taking the fractal play. And so if we broke the low, we broke the below the candle's close. So that was a fractal move. So I'm looking for that. So at this point, a breach of this low would be bonus. Closure below it would even be more bonus. And then the next one down would be again another bonus at that point. So we've just wicked through that one. I'd like to see a closure below it.
But it also hasn't completely formed the full 5-wave movement on the 5-minute also. So
okay, so again on the 5-minute, what you're looking for on the 5-minute might not occur at all because we're in a fourth wave. You see? So because we're in a fourth wave, you looking for a 1, 2, 3 like this, it might not occur.
well, not such a straightforward one, but just a little chop for the fourth wave so they can say they did it. Because I remember the one time you showed us, and there's always the 5-wave movements. They're not always pretty, but there's always those 5-wave movements.
Yes, and they can certainly do that for sure. So at this point now, I can see on here, I can take a partial and make a quick profit, and I just missed it by that much. So yeah, just by hitting this low, that would have been a nice area for a partial. Will they come back one other time? Hopefully they will. Give me a chance to take a partial on that and mitigate the previous loss. So here we come again and take that as a partial at that point. Okay, so now I feel good about the whole thing. I could even bring my stop down a little bit to mitigate the losses. Mitigate any loss, but I don't see the 5-minute playing out to the upside. Like, I can see what you're saying, but because we're in a fourth wave, because we swept these highs, this is more like an ABC move, and we got 5 waves in here real quick, and then they're done, and they're coming down to take out the lows, is what I'm seeing.
Can I ask a separate question?
Mm-hmm.
Do you consider breaking the fractal to be a change of character or a change in structure?
At this point here, for instance.
So if the fractal
that's a change of character.
Bottom,
that's a change of character right there. A break of structure is like here, where there's a change of character here because this was on the downside coming down. So we break the previous high, so that's a change of character. When we move up above that now, it's break of structure because we have a new structure going.
Okay.
So the break of structure, happens here because now we've got a new 1, 2, as it were, and now when we break that to the upside and close above it, that's a break of the structure because we were coming down this way. Once we break this high, it's a change of character, right? Change of character, CC, let's say CC. And then when we start moving up, that's a break of structure right here. Break of structure, yes. Right?
Thank you.
That makes sense?
Yes, yes.
Yeah, the previous move down, you have to break the previous high in order to get a change of character or change of bias or whatever you call it, or change of structure or whatever. And then once you start moving up, the first breach is your break of structure because now you're breaking your structure to the upside. So this is working out nicely on Bitcoin. That's what I was expecting. I went in a little early. They faked me out on that one, right? And they do that sometimes to fake you out. I've got a gap here. So yeah, you see it's tempting to move your stop in, and that's how they take you out. So you look at your gaps to help you. So if I were to move my stop in, so I didn't want to get to lose on this trade, move my stop into here, and that way I don't lose. And then I can put my target to the low. That's where I expect them to get to. That low there. Yeah, and that low is reasonable. And we're going all the way down to this low, but you don't have to go too crazy. So you see they come all the way back in, so you can get taken out easily on a wick. Oh, so all this time we're in the NASDAQ macro. Ooh, you got to see what they're doing there, eh? So let me go back to the 5-minute on the NAS. So same chop. You see what they did? Can you guys see the pattern? Wow, it's amazing. So this is just a chop in a fourth wave, but they do it on this angle. You see on Bitcoin, the angle is this way. They chop it up this way, and then they go up and they come down. So here they're chopping it sideways. So they're very sneaky, and they take out these guys, and now we would expect them to come back down and take out all these guys. So
Tesla actually gapped up.
And we're not at the close yet on Tesla. So yeah, so see how Tesla, let's see it on the 5-minute. Yeah, they've gone in a very strong move this way. So they faked me out because I was thinking, yeah, they wouldn't be coming back up in here and we would come back down. So there's 5 waves there, see? So they're taking out this high. So they're inducing the longs at this point, but they're not going to go very much higher than this, more than likely. There's a gap there, and they're going to come back down, take everybody out. These guys are good. They're really good at what they do, and it behooves you to really pay attention. And even when you are paying attention and everything, it's still very difficult to see this stuff. So there's a gap here. So are they going to go much higher than this? Probably not. I wouldn't expect them to take out this high. Possible. So this now becomes this guy here. I want to see them break, coming back down.
The 1, 2, 3 on the 1-minute chart top seems to be safe.
They're still going up.
We're still in wave 4. Wave 4 going up on the 1-minute chart.
Yeah, they're still moving up here. They're looking, let's see. Let me go back to the 5 again.
This thing's going to come crashing
Very
down.
good. So again, I wouldn't expect them to take this high, but it's possible. I just want to see them just wick here and then come back down at this point. NASDAQ is starting to come back down. That's what I would have expected. So they swept these guys out in here. So I wouldn't think they would go up and touch these guys. Possibility though. It's a very choppy area, and then looking for them to come down. Let's see, they didn't take that high. Let's see if S&P did. S&P did. See, so there's the divergence. So there's divergence here. S&P swept that high. So that's a telltale sign right there. So S&P swept 1, 2, This is a move to the downside. It's not a 1-2 on this side because they swept that high. So the 1-2 is inside. So this is a change of character right here, marquee, because we came back against the previous low, and that's a change of character. So now we get a 1-2 and go down. Then once we break that, then it's a break of structure. So that's how it's done. So it's not a change of character until we close below it, though. Wicking below it doesn't count as a change of character technically, but our 1, 2, 3 doesn't care about if it closes below or not. We just need to just break it. We don't need a closure, and so we get a retrace back in. It's a sell. But the terminology or the rule for the change of character is that you must have a closure below. But for the 1, 2, 3, it doesn't have to be a closure below. It's just wick below is fine, and we can come back in and continue down. So this divergence is very important because on the NASDAQ, we don't get that divergence. So the NASDAQ says, I'm a little weaker right here. So our 1, 2, 3 is this 1, 2, 3. And then we get a second 1, 2, 3, and then we'll be looking for them to drop. So it's very interesting here. Right? So this is a little manipulation on their part. So we need to see them break this low. Coming back down for a change of character. And this one, because this is a 1, 2. So this one is the one, the true one, but this is an intermediate one. So will they turn it around now and come back down? See Tesla again. Tesla has gone up higher. Wow. Okay, so they're going through the gap, which makes sense because there is a 1, 2, 3 here. So this 1, 2, 3 says we should go take out these highs. So interesting here. Very interesting. So I'm looking for a turnaround on the NAS, but Tesla is still pushing up. So they're really inducing them to go long on Tesla.
I have to go, Lennox. We'll see you tomorrow.
All right, Peter.
Yeah, good show. Good show.
Hanging in there with us.
Yeah, thanks.
Good night, Peter.
Have a good rest of the day. So looking for them to drop the NAS here. It's closed now. Tesla is closed now, right? So they pushed this up. So it looks like what more than likely tomorrow morning we're going to open up low based on the indices. So this gap doesn't count anymore. Maybe it still might be just a wick. How's Bitcoin doing? So Bitcoin over on this move here on Bitcoin, on this drop, I was able to make like almost 25 grand on this move here. I had a let's see how much it was, $23,301 move. So this little move, should continue going down here. So we're in a huge fourth wave on this guy. Very messy. Probably kid stuff. There is our structure and the expected move. Go ahead.
Oh yeah, based on the length of that down move, that third leg, do you at any point look for the retracement based on the based on that length, the length of that third leg coming down?
This moved in here.
Yes, coming down. So you expect the fourth wave to be more elongated?
Again, I would be looking at the height from the first leg. So that height there would be what I would be looking for the height of this move down. That's what you're referring to?
Oh, not the move down to create the fifth wave, but the fourth wave. Oh,
okay. The width of it this way?
In terms of the length of it,
the length of it in which way? This
whether
way?
it's going, yeah, like in terms of time or cycle.
How long it would take for it before it breaks out? Is that what you're referring to?
Yeah. Do you gauge it based on that leg coming down?
Oh, I see. Like from here, how long it takes to go this way?
Yeah.
No, there's no. You can't. I don't know of anything that would gauge that, because what they're doing is a concerted structure. They're doing a structure of some kind in here, right? And it's usually like an A and a B and a C and a D, and then I would have expected an E here, and then we'd come down, something like that. But in Elliott wave, there's all kinds of different types of structures. So I don't get into them because it's too complicated. I told you guys that, right? I just do the A, B, C, D, E because it's much simpler to do A, B, C, D, E than to get into X, Y's and Z's and all that, which you can get into and go really deep into this stuff. So if it's not an A, B, C, D, E, then it's a more complex structure. And then it becomes very convoluted and crazy. So it's best to just avoid the fourth waves period and just don't worry about it. So what we're trying to do then is to try to identify a point where they've come back up into something, swept something, come back up into something, and then look for a 1, 2, 3 top to come back down. That makes sense?
Yeah, it does. I do understand that. You're looking for the E leg now to.
Yes.
For the
so I'm
one,
looking
two,
for an
three,
E leg, but in this case, what is it? Is it, I got an A, a B, a C? Was it like this? That could have been it. They can do that and mess you up because they can traverse all kinds of ways. And like I say, in Elliott wave, they can call it X, Y, and Z, Z, and Y, Y, and they have all these different terminologies and definitions for these structures, but it just gets too complicated and it's too intense for most people. So especially if you're learning, you don't want to be getting into that kind of stuff. It's crazy. So try to keep it as simple as possible and try to see the overall structure. So the overall structure to me is like this at this point would be, since we did not break this high, then we want to be coming back close to this level for the next one. So what's the closest one? That one. And then See how they took out these guys here, and then the next move would be to come back up to take out these guys. So they've done that. So that gives me my A, my B. So I'm trying to simplify this, right? My C, my D, and my E. So that's a simplified way of looking at it. Maybe too simplified, but that's what they do to mess you up. They chop it up inside these legs because each one is a leg. So we come down, we get an A leg, a B leg, a C leg, a D leg, an E leg. So this is a typical pattern. So we get our number 3 point. This is a typical pattern. And we know when we get our A, let me do that again. When we get our A leg, come on. There we go. Okay, so when we get our A leg here, I'm going to make it a capital A. That the B leg here coming down, usually, but not all the time, might take out the number 3 point, maybe. Sometimes it does not, right? So there's different little ways they trick you. The A is usually taken out by the C, but not always. And then the D takes out the B, but not always. So right, so it's tricky. The E leg now should take out the C for sure, and the C usually takes out the A. So this is the only one that's left. And sometimes the D is not taken. If the D is not taken, then there's obvious liquidity below both. So if the D takes out the B, there's only liquidity at D, and then no liquidity over here. So once they take all the liquidity up here, it's a fake move to the upside, and they leave the liquidity here to take out everybody down here. So this is a typical move, but inside these legs, they can mess you up. You see, it's usually typically ABC moves. ABC moves. That's typical. And then this one is 1, 2, 3, 4, 5. So that's kind of the overall structure to keep it simple. But inside, like the C leg here, they can do all kinds of different things. And there are lots of rules for these legs. And if you went to wavebasis.com, I think I've shown you guys that. They give you a breakdown of each of the, you can break down each of the A legs, the B legs, C legs, and so forth, and you can find the proper criterias for all. But again, you're basically getting a PhD.
Yeah, you don't want to get so
it's very deep, right?
Yeah,
that's what I'm trying to say. Right?
It can be. Yeah. You could wait for the easier opportunities.
Yeah, so I would say, it's best to just try to keep it as simple as possible. That's why we call it the simple 1, 2, 3, because if you just stick to the simple, because this 1, 2, 3 is not just like that. It's 5 waves here and an A, B, C here, and then we're moving, right? So you have to understand that it's not just a simple straight line like I just drew. Here, this is what it is, right? Like that. But you can see inside of it, it's got five waves. Inside the move up, you can't see it, but there is an ABC in there. But that ABC, this ABC, consists of 1, 2, 3, 4, 5 waves. Just in this portion of it. Just in that portion of it. In this portion of it, it's an ABC. And all the time, anytime you get an ABC move, you see, anytime you get an ABC, the C contains 5 waves. The B contains ABC, but each C contains 5 waves. You see?
Yeah.
So it's just fractals. It's fractals within fractals within fractals within fractals. So every time you get an ABC construct, it consists of 5 waves on the C leg. But inside an ABC, there's always on the C leg, there's five waves. The B leg contains ABC again, which contains, and so on, to infinity. I mean, as far down as you can go in the chart, right? So that's why I can go down onto the seconds chart and look at it and say, oh, I'm on the 5-second chart. I can see what they're doing. I can see that they did this 5 waves. See, it's all the same. Oh, they did 5 waves again. You know, they're doing 5 waves of some kind in here. And now they're chopping it up. So obviously they're in the 4th wave of some kind and they want to continue moving up or something. So you can discern what they're doing by just by that structure.
Okay. I know your time is coming close for the session to end, but I am in the Euro Yen and the Euro USD for the long.
You're a diehard, eh? All
Yeah.
right. So you on the hourly?
Well, the 30-minute as well. I normally take my trades from that.
All right. So okay, I'm going to look at this again so that we everybody understands, because I think this is the thing that messes everybody up. Because when you go down to a lower time frame, everything looks all fine and dandy and so forth. I'm going to take off all these lines off this thing so that we get a clean chart for the clean chart. So, okay. All right. So what we've ascertained is that we have a 1-2 here, and then this also is a 1-2, and then we get this move. So this big move tells us that this is our number 3 point. So if we're looking at this as 1-2, and this is our number 3 point. So we're chopping up and down right now inside 4th wave. So the first thing you have to remember now, Omar, and you have to keep in mind all the time, is that you're in a 4th wave. So if you keep that in mind, no matter what time frame you're on, remember, you're in a 4th wave. So when you're in a 4th wave, anything can happen in here. So you have to be super careful, because as much as you think you get a 1, 2, 3 and you can, you know, make it all the way up to the top and all that, it's not a good thing, because you really should just be looking at trading just to get to the number 3 point inside a 4th wave, especially. I mean, most of the time you should just be looking to get to that point in any 1, 2, 3 anyways, but especially when you're in a 4th wave. So this move here, if you get in, you just want to get to the 3rd wave and that's it. Once you get into here now, it's a whole totally different ball game. So all right, so now we've established that we're on that 4th wave. We can drop down to the time frame. So we can go to 4 hour. So now we can see on the 4 hour, yes, we clearly are in the 4th wave, right? We can see that we dropped to this level, push back up to this level, drop back down to this level. So our expectation now would be that we come back up to this level again.
Yes, because they swept those lows in the middle there.
So if they've swept them, so now we can mark off our A, we can mark off our B, and we established that if this is 3, then usually they will sweep that, so they did. And then they will sweep this one, so they did. So there's only liquidity sitting here now, and there's only liquidity sitting here. So the likely place that they're going to go for liquidity is back to the high, right?
Yes.
If we're correct. If we're correct. So sorry, this is going to be, whoops, let me put that back. This is going to be our C here. And it looks like Bitcoin stopped me out. Wow, so they came back to get me. So this is our C right there, right? So if that's our C, we could say, yes, we would be looking for us to come back up to D and likely to take D out. What's the other alternative? You have to always look at the other alternative, right? What's the other possibility here? If we're in a 4th wave.
Yeah.
The other possibility is that this wave could only be C, and then we could just go down You see?
Yes, especially because there are many gaps there for them to come back into.
There's gaps down here.
Yes.
Yes. So now you're starting to
And then
reason.
they would be coming into discount there when they come
So
down here.
So the only way this can be a C leg coming down is if the 1, 2, 3 down here, back down here, if that 1, 2, 3 is an A, B, C, D, E. That's the only way this will be an ABC. You understand?
Yes.
So if the first wave was an A, B, C, D, E, then this will be an ABC. Otherwise, it'll be just a 1, 2, and then an A, B, C, D, E here. And then we go. All right, so let's rationalize and say, okay, we figured it was just an ABC, so this should be A, B, C, D, E. So if we're correct and it is an A, B, C, D, E, then this is going to play out. We're going to get this leg going back up to D. Then the next leg, will be the E leg. The E leg is like the C. So the E leg would then come down and take out the C and could take out even these guys and come into one of these gaps, right? So that would give us our E, and then we would go back to continue to move. So that's what I would expect them to do, with no guarantee of it, of course, but that's, so if that's correct, so let me just shrink up the chart a little bit and we'll see if we can find our 1, 2, 3 bottom. So there's our first 1, 2, 3 at that level, 1, 2. So that looks reasonable, but we did have a chop here. You see, so it's quite messy. So is that a B, C, D, E? Not really. It's kind of weird because the A, B, C, D, E should be more like 1 A, B, C, D, E, something like that, more so. Going this angle, that doesn't make sense, but maybe they're messing everybody up, right? So it's a tough one, but this 1, 2, 3 looks reasonable. Another 1, 2, 3 looks reasonable, and then they took everybody out here on this one. So we got a 1, 2 here. They took everybody out here, and then they took off. This is just a nice ploy on their part to take everybody who thinks this is a nice 1, 2, 3 to go. That's what they do. Remember I told you that they can take out the middle leg before they go. They like to do that. It's a good ploy.
I like to see those sweeps, especially in the fourth wave.
Yes, so that's where we are right now, and then they're doing the sweeps. So it looks pretty good that they swept these lows. So we're at the where are we now? A, B, C. So we're looking to go up to D, and we want a nice 1, 2, 3 right here to take a ride. So going down the time frames, we're looking for a 1, 2, 3 here. So do we have a 1, 2, 3? It looks like we've already done it. We drop down to the 30. 1, 2, 3, 4. Maybe we haven't done it yet because on the 30 it's saying 1, 2, 3, 4. So we could still come back in. You see, these guys here in the middle could be in jeopardy. This gap could come into play. Understand?
Yes.
They can still come back here before they go. So I'll drop to the 15, we'll see it even clearer. Okay, so on the 15, I can see the pattern very clearly now. So 1, 2, 3, 4. So this is a fifth. We've taken out the fifth. They're taking out these guys over here. That's change of character on all that. So yes, we can retrace back into this gap here, which is also on the 530. We can retrace back in here to sweep these guys here. That's a sweep before they turned around and go back up. So watch for that. If we're wrong, and it's already 5 waves at this point, and that's possible, but they didn't sweep these guys here, interestingly. So it's still possible. Then we're on our way, right?
Yeah, it's
But you have to be watching for this possibility here, that this possibility is still there. So don't be surprised if they come back down later to take these guys out.
yeah, they could do that in the Asian session.
Yes. They'll induce them to go short because because we've been going short, people might think, oh, maybe they're just going to continue going short, especially when they take these guys out. And that will induce them to go short, and then they turn it around and take off.
Yeah, I think I should exit and wait until see what's happening closer to the London session.
It's that's up to you, and I don't know where you are in it and so forth, but keep those kind of things in mind as you look at the structure. So yesterday was very sneaky on their part here at this. I realized it after that. Oh my, they're faking everybody to go long here.
Oh, that's where I was yesterday.
And they were chopping it up in Asia. And then I realized, oh, I see what they're doing. I looked at the bigger picture, and yeah, they're going to take out this low. They were gunning for this low, so that's what they did. So lots of money to be made on the sell.
Yeah, I realized this morning that it was a good thing I exited. I exited at the close of the day, around about 5 New York time.
So you were able to get out up here.
Yeah.
Because they were coming down to take everybody out. And just going back to Bitcoin real quick here on the 5 minute. So Marquis was correct in that, yes, we have a 1, 2, 3. There's no guarantee that they're going to take that 5. But that's what you would expect. So they came back down. They really made it look like they were going to go. So good thing I moved my stop into positive, took off some profits and everything, moved my stop into positive just in case they're going to do that move. You have to do that because you're in that structure that they can do that move. And if this is an E leg, you would expect 5 waves. So that's what they're doing. So they're taking out that high. See, they're going up. Where are they going up to? They're going back up to an order block or some kind of a gap up here or something, right? So we can expect that they could push up to those areas before they come down. So we're still looking for sells, but that was a very sneaky little move on their part. But you can see our structure is playing out nicely. And, sometimes you can see it, sometimes you can't. You have to be aware of what the possibilities are. So there we can see our structure. So it might not be going up very high and very far here because our structure is almost complete.
Yeah, I was suggesting earlier that this fourth wave
they could go up higher, yeah.
Up, yeah, they could.
And you're certainly we have to look at that because it is where are they going back to, right? There's order blocks. And like I said, there's a gap here as well. So will they push all the way up here? It's possible, but it seems a bit of a stretch at this point. But yeah, anything's possible. So I mark it off. I mark it off this way because it's already been mitigated, the big portion of it. So they would have to come above it.
Well, all right. A follow-up question to that. Say Bitcoin. Where would you mark your fib from the number 2 point coming down on that leg coming down? Because I realized
fib for the retracement.
The fib coming down from the number 2 point.
Yeah, it would be from the number 2 point right here to the low, right?
Yes.
That would be where I would be looking for my retracement back up 38 to 50%. So 38 to 50% puts us right into this area here. So you see there's a room there for them to come up in here. What's there is a gap. I mean, there's a order block.
Oh, I know you explain it a lot where you mentioned the 38 to 50%, but
Mm-hmm.
I tend to more look for the 61.8.
For which one?
For 61.8%.
61.8. So the reason why it's 38 to 50% here is because it's the third wave. In this wave, yeah, it's more 50 to 60. Like I say, 50 to 62% you want.
Okay.
On the first, on the retrace of the second wave, you want 50 to 62% retrace. That's because about 89% of the time, that's what occurs.
50 to 62.
Yes. So
Okay.
this occurs about 89% of the time. So you have to go with the probability because everything is just probabilities. Everything is just math here, right?
So
the move from here to here, about 89% of the time, it's going to come in to the 50 to 60 to the 38 to 50% range.
okay.
And the reason why you want to see it come in between 38 50% is because the likelihood of a price taking out the fifth wave becomes higher, the lower it is. So if it goes up
lower
higher,
retraces.
yeah, if it goes up higher, then the chances of it coming back to take out that, becomes less. You see?
I tend to like the 62% more.
Yeah, you can like it. I mean, I love the 61.8% as well, but I'm just giving you the mathematics on it. Right?
Yeah.
Yeah, I mean, you can certainly say, yeah, oh yeah, it could come back, but it might not, right? It might just come into here and then turn.
Yeah, and
it
then
might just touch 38% and turn. That will be ideal because then you have a much higher probability that this this fourth wave here will be taken out. The third leg will be taken out. So there are traders, and that's what there are traders who just trade the fifth wave only. So they're looking for this move back up into 38 to 50%, and then they're taking the trade to take out this low.
But the thing that I don't like with the 38% is that, is it 38? Yeah, 38.
38 to 50, yeah.
Yeah, the thing that I don't like with the 38, because as you notice in this instance, if you were looking for the 38, you would have been in the trade already, I think.
No,
No,
we're not there yet.
Not there yet.
No. And the reason why 38 to 50% is more logical is because the move from in the second wave to the third wave, end of the third wave, is very long. So it's not reasonable to think that price should go all the way back up 68%. 68% is very high.
No, 62.
Yeah, 62% is very high. 50% is still quite high. 38% is reasonable. You see, okay. So the reasonable area for price to come to would be in this range because of the length of the move. It's made such a big move. You don't want to see it go up so high. So that's why that's the logic of it. So you can see they're basically touching 38% and turning at this point. But we can discern that on the lower time frame, like on the minute, by looking at the structure of our move. So we can see this is what we have, the advantage we have over other traders out there who don't believe in or follow structure. Don't believe in the Elliott wave. This move is they swept that high. So sweeping this high, that could be end of it. We sweep this low, we get our 1, 2, 3 here. We're done. We've come very close to 38% retrace of the entire third wave move. We're done, and we're on our way down. We don't have to be looking at anything else. See?
Yeah.
So this is a huge bonus if you can discern this. And it doesn't mean that, yes, this is it because we swept here and, this, we've break this level, that's it. We could be just chopping in a fourth wave too, right? And they could still go higher.
Yeah, that's a possibility there because I can.
So you always have to be, careful about that because you can jump in and you get stopped out. You think, why am I getting stopped out? And that's why, because you're in a fourth wave.
Yes. I'm in the euro yen.
Okay, euro yen. How's our time?
But the thing is that I don't like to stay in the trades after.
We are coming up to a dangerous time of the day.
Yeah.
Right. So that you have to be careful at that time of day.
Because the spread widens.
Right. They widen the spreads to take everybody out. Right.
Yeah.
So euro yen and GBP JPY are basically the same, right?
Yeah.
Let's see. They're identical almost. We do have divergence though. You see that, right? There's divergence right here. That's the euro yen. So they swept on the euro yen. They swept the low. But on GBP JPY, they did not sweep the low. So there's divergence. They didn't sweep the low. So that tells the story right there, right away. So you're on the euro yen. We swept the low, so that's a good sign. We swept the low, and now we want to sweep the previous high on our way back up. And we haven't yet. We've done it internally, and then we're looking for a move to the outside. But right now, we could just still be doing this and then coming back in, similar to what we looked at on the Euro USD.
Yes.
Right. So because we're on the hourly, better to go and look at it from a lower time frame. So you can see on the 30, it's telling us, yes, we swept, move that one, sweep here, retrace back in to a gap. That's an entry at the lower level. You don't have to wait for this higher break up here. You see? So if I go back to the hourly, this is what's really cool about this. Okay, if I mark this high, oops, that's the wrong thing. If I mark this high, so on the hourly, we're looking for, would be the change of character. But if we drop to the 30, our change of character is different. It's going to be internally here. So that's the change of character right there. So we don't have to be waiting for the hourly one. We can take advantage of it earlier.
Yeah, that's why I like the 30-minute.
Yeah, so there's a sweep, move back up, change of character, retrace back in to a gap. That's a buy. So we get another one, and now we're moving out. So it's making our structure for us, but we're not done yet. So we're at this point, we need to break that high, go up, maybe take that high out, and then we'll come back in to take this low out, and then we get the move to go. That will give us our 1, 2, 3 to go.
They might do that in the Asian session
because it's identical to Euro USD.
Yeah, it's a similar setup.
Right, you see? Okay. So now I can drop to the 15, and now we can even see it with more pronounced way. So there's the sweep, very clear. There's the move up. There's the sweep, change of character, drop back in to a gap, to the order block, everything there. Fractal, entry, 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 right? Check mark, close above, check mark. Everything is check for a buy. This is a play, you just get out right there and you're done. You know what I mean?
But sometimes what I'm like, I would want to make the whole move one time.
But I'm telling you, Omar, take the small bites. You make a quick $100 here, you're out. You can always get back in again.
Yeah, I'm
Take
learning.
a quick
I'm
$100
learning.
here, you're out. You can always
Yeah.
jump back in again on a retrace. You know, once they take that low, you can always jump back in again. Take another $100 off right there. You know, you don't need to be sitting in here for hours and hours and hours on end waiting for a big move. It's not realistic, because they're going to mess you up and you're going to lose your way in here and so on. Jump in, take the quick money.
Yeah,
Because
yeah.
when you're building an account, if you're, you know, if you got $300 in your account, you know, better for you to take a $50 win, $50 win,
Yeah,
than trying to sit there waiting for a $300 win that might not even play out, and they stop you out and so on, right? Take the $50, it adds up quick, and then next thing you know, you're doubled your account.
Yeah,
You guys, I gotta go for now.
All right,
I
Armin,
just say
thanks
good
for
evening.
dropping in.
Yeah, it was nice to see you guys online.
All right.
Talk to you tomorrow morning, Lord willing.
All right,
See ya.
sir. Take
Good night.
care.
All right.
So yeah, you know,
Yeah,
better for you to take the quick profits. You can always get back in.
yeah. That approach is very good.
Especially on a 15-minute. If you're looking at it on a 15-minute time frame, that's a lot of money you just made right there.
Yeah.
Right? That's a long time to wait too. 1, 2, 3, 4, say 4 15-minute candles. That's an hour you've waited. That's a long time. I want to be out in, you know, like 5 minutes. Never mind, right?
Yeah.
Well, think about it that way.
Yeah, I kind of prefer to play the currencies, because I don't have much luck with the Bitcoin, because it's so volatile at times.
Very volatile, yes.
Yeah, you will see a setup and you say, all right, this is a nice 1, 2, 3, and it don't follow through.
That's
where
right.
it doesn't go to your target, so you have to be just. And sometimes you get good runs, but you know. You just don't know
it's
when.
very quick, so you have to be really careful, right?
Yeah.
But you know, do think about just taking your profits quick and getting out, because when you're building your account, you don't want to be giving up, giving back your profits. You know, you're up $50, $60, $70, and then it's coming back against you. You're down to 20, and it's like, yeah, I should have taken it at 50. You know, take it.
Yeah, yes, that's so.
Always jump back in. Always keep that in mind. You can always get in. There are always opportunities.
Yeah, because the market moves in waves, so you can.
And you know what you're looking for, right?
Yeah. Yeah.
This setup here is beautiful. This is like, oh my word. If you can just spot that every time, and just look for the, you know, what I'd like to beat into everybody's head is just look for this pattern. And if you don't see this pattern, then don't trade, right? That would be the ideal to say to everyone. Okay, this is the pattern you're looking for. You want to see a sweep. You want to see another sweep, change of character they call it. You want to see that move up to change that of character. You want to see the retrace back in. You want to go back to an order block or a gap. And if you don't forget about order blocks, forget about gaps, you just want to move back in around 50 to 62%, right? If you can just do that, just retrace back, just say 50% even, just, you know, like if I put the fib on that move in there.
Yeah, that's about.
Right. I'm just going to put the fib on this move. So from here to here, how much did it move back, right?
62.
If we say 50%, if we just say, okay, let's move back 50%. And if it moves back 50%, take the trade. Put your stop below the low. If you've got the sweep and you got the retrace back to 50%, take the trade. Then you take your profit at the top That's it. You're done. You don't even have to go anywhere else. You don't have to go outside of it. You can just take your profit at the top, because from 50% to here, that's like maybe 1 to 1. Maybe you might get a little bit 1.5 to 1 to 1.5 or something like that. That's plenty. Just do that 10 times. You know, maybe once in a while you might get stopped out, but you know, you're gonna catch this move all the time. So that's when I'm trading and I'm just scalping away. That's all I'm doing. I'm just going in and I'm jumping in and I'm taking a quick profit at these levels, because I can make a quick money, you know, to these levels.
Yes.
You know, I'm out. I can say, okay, all right, I can take a portion off and I can move my stop into break even or higher. I like to be a little higher than break even. I want to be in positive. And then if in the case that they decide to take me out, okay, it's fine. I still win. But if I'm correct, it'll continue on, right? So try to think about it in that way, because too often what you're doing, you're setting yourself up for failure, because you're waiting for these big moves that's not going to happen for you.
Yes. So very sound advice. Thanks for that.
All right.
All right. We have.
It was you or JPY. Were you looking at something else?
No, just the Euro JPY and the Euro USD.
All right. So those two seem similar at this point, and GBP JPY is similar. Like I said, the only difference with GBP JPY was that they didn't give you the sweep there. They gave you divergence. So it's telling us a story. So we did get a sweep. We did get a change in character. We did still get a 1, 2, 3. Everything is still there. So 50% retrace of that move, and that's still a buy. And that's a nice move. Take profits off. Take profits there. Don't need to do anything else. You're just waiting now for a new one to set up. All right, sir.
Oh, in essence, there would be that chart would be in a fourth wave there.
On GBP?
Yeah.
On the same time frame?
The 15-minute.
It's on the 15. Yeah, it looks like we're, well, yeah, it looks like we're kind of in a fourth wave, because we've got a 1, 2, 3 here.
Yeah.
And then we did 3, 4, 5. So is it a fourth wave, or are we done in this move? So this whole thing becomes a 1, 2 now, right? So we're more than likely doing something like this, where we'll take out these guys here, and then we'll make that move. Yeah. So it's making a 1 ABC, right? Remember the 1 is an ABC. That's why they take this guy out, these guys out in the middle there, because it's the same thing as sweeping. They're always making that ABC pattern, and then they go.
I'll say if you take that first move without that number 2 point, without putting your stop, no, not that one.
Up here. If you take this entry here.
Yeah.
Yeah. So you don't want to do that, because you're up too high. Remember, you want to be in discount if you're taking a trade, right?
Based on the drawing on the chart, I was wondering where would that coincide with?
No, I would.
The drawing, not that drawing, the one below.
This drawing here, it would be here.
Oh, it would be there. Okay.
Yeah, because see, we're doing this leg right now.
Okay.
Right here, and then they're going to come back down to take everybody out who went in here. So this is why it's not good to go in here.
Yeah.
Because these are liquidity levels, and then you've got gaps. So they're going to come back down to the gap and then go. See, it's a ploy. It's a beautiful, logical ploy on their part. And if we were If we were them, that's what we would be doing. We'd be saying, oh, let's fake them to go long here. Where are they going to put their stops? Right here. So let's go back down, take them down back into the gap and take them and then go. Logical.
Yes, it is. I normally prefer to get in at the low, over to your left there.
This is where you want to get in.
Yes.
This is the spot.
Yes, sir.
That's the setup. But it's much prettier, much nicer, much more defined on the Euro JPY. That's the setup that we're really looking for. That one, where you get the sweep.
Okay.
So they did the divergence there to trick you, to trick the two different players. One's playing Euro JPY, one's playing GBP JPY. You're duped into jumping in early on GBP JPY because you didn't get a sweep. So that's how they trick you.
Oh yeah, you got the sweep on the Euro, but you didn't get it on the.
So this is the better setup. This is telling the truth.
Yeah, and as I always say, that's why it's good to be looking at both of them.
At both of them, yes.
And the same thing happens with the Euro USD and the GBP USD.
Yes.
If you look at it quickly, it's the same.
Yes, I know that they do exactly the same thing. Yeah, and that they're tricking both sides to do one or the other, right? And so we get divergence on both. So it's very powerful.
Yes.
You can spot it. So if I go back to Bitcoin real quick, they're doing that on the 5 minute. You see now they're pushing up higher than. Now they're coming into the 50% level. We're at 38% now. We're really touching 38% now. So they're still going higher. So that move in here, what I was saying, that it looks like we could be done possibly, it's not, because that's how they trick you. So inside is 1, 2. See, the inside of that move, that's what the key is. Inside of it, this looks like we're done, but it's only a 3. So then they go into 4. Then they go back and do 5 more. So we're now taking out the high. So it looks like they're going to push up close to 50% before they turn this around and come back down. So they're very tricky and very good at this.
Yes.
All right. On that note, I will call it a day.
Thank you, sir.
Yes, sir. Anytime. And thank Marquis, still hanging in there with us. Wow. Marquis a giant.
All right, thank you, as
I hope
always.
that made sense, Marquis, all I'm saying.
Yep. It always does. So I appreciate it. I appreciate the effort and the time.
No problem whatsoever. Glad that you guys are seeing it.